Hello, everyone.
Hello.
I hope that you're
Hi.
okay today. This is the Friday end of the week, so we can start a little bit to recap the weekend setups. So I'm the first time with Howard, so I would like to meet you and to learn about more your strategy and your opinion. So can you start first, please?
Absolutely, absolutely. I've been in the markets for quite a long time. I think over 30 odd years. Most of the time I've spent doing foreign exchange, but also I've covered most of the other markets as well, either trading or doing analysis, or more recently doing some trading education as well. Style wise, trading style wise, for big picture stuff, I use Elliott Wave to give me kind of my kind of bias for kind of multi-day, multi-week stuff. But for actual putting on trades, I drill down to shorter term charts, and I'm much more into using daily session highs, lows, closes, ranges, volatility, that kind of thing. Just a combination of all those things, so that's really kind of what I do on the markets. Today, I guess I'm going to be talking a bit mostly about foreign exchange, although I've got views on some of the other stuff. I'm a big dollar bear based on a lot of different things, positioned up for a decline in the dollar against particularly the European currencies. So
Excellent. Excellent. So can we start maybe from the today's news? I can just shortly just to show the economic calendar, just to show the things that I'm just watching right now. Like this. Okay. So I will just give two things about today, Friday, March 28th. We had a retail sales, better than expected results, and we got a core PCA price index as same as better than expected results. However, the price doesn't follow this news today. I watch a lot of news right now in the market sentiment. I got information that the increase in current dollar personal income in February primarily reflected increase in personal current transfer receipts and compensation, and that we had, I think, 87.8 billion increase in current dollar PCA in February, and 56.3 billion spending for goods. But I want just to share with people, because I'm just watching what a few traders and economists talking about the news, and I see one thing that everybody, so all these traders and talking about that this statement today highlights a concerning economic scenario for the US dollar, and talking about stagflation, which combines high inflation with slowing economic growth. And maybe this is the reason why the market reject this news, and we have right now last hour bullish trend for major currency pairs. So please, can you tell me what is your opinion about this news today and about market today?
From my perspective, really,
Yes.
I'm kind of blinkers on when it comes to the analysis. I think that if you're trying to look at different fundamentals, there are a lot of things that can kind of confuse the thing. For me, the technical picture for the euro dollar, for example, is up. Same for sterling dollar cable. I think, and I'll present my screen just to give you an idea of what I'm
Yes,
doing and what
yes.
I'm thinking
Just
on
give me my,
these pairs. So just
yes,
sure thing.
please.
Just 1 second. Okay. Hopefully you should see it coming through fairly shortly.
Yes, I will approve. Okay.
Okay. So yeah, first up is euro dollar. I think yesterday we made a major low in terms of the end of a corrective pullback. Let's move away from the short-term stuff for now. Let's just go to the longer term stuff. So as I say, I use Elliott wave for my to give me my directional bias. And I think what's been happening with this market is we've been trending higher. The recent pullback, the last well, several days from 109.55 to where we were yesterday, day before yesterday, was a fourth wave correction. So we have kind of 1, 2, and we're in a kind of extended third, 1, 2, 3, and I think wave 4 based out here. 107.33, that right? 107.33 thereabouts. So today I think we are starting to kick off the fifth wave within this sequence, which should take us to new highs. So looking for this thing to break yesterday's high, which was what 108.21 or so, and then we should really be kind of off to the races in terms of a resumption of this major trend for the euro. Zooming into the shorter term stuff, bought some 94 or so, looking for this push up to into the mid 108s. Maybe today. It looks like it wants to have a go today. We yesterday the rally kind of stalled. We got that long upper shadow on the candle, and then we've since seen this kind of corrective looking pullback into today's low. But it's based out not a million miles away from the 50% retracement of the first leg up. So it looks to be typical kind of basing action for the next leg of the rally. And I think there are a lot of people that are trapped below that 108, 107.75. Um,
Yes.
all these sellers here were trapped, and today's pullback, I think that gave them a chance to maybe get out without losing too much money. Some of them, and now we're starting to see the acceleration as they really come in, and they realize they're on the wrong side of the market. They need to get out of this of the losing position. And I think once we break yesterday's high, then this could actually start to accelerate. On the just actually flipping back to the weekly, I know the week hasn't finished yet, but one thing that I've noticed about the action the last few weeks is it's a little bit similar to similar kind of situations where we've had a big thrust in the direction of the trend to the upside, followed by a couple of small weekly candles. Then we get a kind of a push lower with a long lower shadow at the bottom, which is, I think that's effectively what we're forming today, or this week rather. And that will be the end of that will confirm the end of the correction, and then we go up to new highs. Similar kind of situation we've had there, thrust higher, couple of small ranges, long lower shadow, boom, up for the next few weeks. Here, nice thrust higher, couple of small real bodies there, small candles there, thrust up for the next couple of weeks. And here again, big thrust higher, couple of small candles, long lower shadow, back in, then up we go for the next few weeks. So that's really my my kind of view on the euro dollar. Sterling dollar cable is very similar, I guess, in that the pullback we saw from the recent swing high, I think has been a corrective pullback. The trend for me is still up, the major trend for this this market. So we're doing this kind of stepping higher on the daily chart. It stalled above 130. Then we saw kind of like a bit of an ABC type correction down, and there's big support coming in between these two lines, which are just minor support levels on the way up in the bull market, and it seems that buyers are stepping in as we get into that region. So yesterday was quite a nice push higher, which probably made the end of the correction, and today, similar to euro dollar in that we have seen a kind of an ABC correction of that first move higher, and now we're starting to see the real buyers step in. And I think there's, again, as with euro dollar, there's a lot of people that were trapped on the break, the recent break below. So yeah, I'm positioned long both of these pairs. looking for strength today, and maybe holding over the weekend for Monday, depending on how we shape up. Any kind of views on those ones, guys, before I move on to something else?
Yes. First, I can say just that my analysis, even I do not use the Elliott waves a lot. It's completely the same about the market structure and everything. So I can just show my charts if you don't mind, Howard.
Absolutely.
Okay. I will just find present. Just a moment. Okay, I will just the catch is that I need to approve because I'm the host in the same time, so it's a little bit slower than usual. Okay, I will just show here. So I just talked with James, and I very often started to use Lux Algo free indicator for MT4, and we are still, if we watch the daily chart, it's still in the bullish market structure. So this is very important for all decisions, because all these false bearish breakouts usually can a little bit trick us in trading. So, and for British pound dollar and for euro dollar, we're still in that bullish market structure, like this blue line just showing, and of course the naked chart just show the same thing. When I watch my chart right now, we can see that we are really in a bullish push up just 1 hour before the news. And I would just want to share with you my trade that I created today, and I recorded that trade just for the traders that watch this session, just to see my mindset. So what was my plan? Actually, I realized if we go to the daily chart and watch this week and see the Monday it was the March 17, we can see that we are still in the Monday's range. So our price still oscillate in this Monday's range, and we are in Friday. So my strategy usually when we are in Friday in the Monday range is to try to either to buy a low and sell the high, because usually it's some kind of the range. However, I wanted to find some good price to enter long, because I want to keep that bullish market structure that we have. And I will just share the recording right now, just to see the process, how I took that process. I will just stop screen, and I will add just to see my screen right now, entire screen. Just a moment, I'm a little bit okay. I hope that you will see soon. Okay, just a moment. It's a little bit slow. Yes, this is the moment when I wanted to enter into the trade. So what I found is that we touch simple moving average 50, and there was a strong reaction early level. So my plan was to wait again, because based on my experience, very often when we have some price rejection in major currency pairs, price 1 or 2 times again try to touch that level. And I waited. I think I waited a little bit. I will just speed it up, this video. I waited a little up, and when we was very close to the simple moving average 50, I decided to make the trade. I put my trade, my stop loss, just a little bit below 1.29 level, because this is my bullish bearish validation point for today. And my target is today high, that we actually last 24 hour high, that is around 1.2990. And this is the trade that I created just, I think it was an hour before the news. And of course, very soon this price started to go up. Now, when we watch this, we can see after that we have two bullish candles, and on 1 hour chart we're still holding above simple moving average 50. So for traders that maybe scalp right now and have just idea, I think that this simple moving average can be really good stop loss, maybe just few pips below this level. And of course, we need to see what will be the highest price for today. So we have a couple levels. Of course, one level is 1.3, 1.3115, which is a weekly high, and a level 1.2990 that I picked because it's a last 24 hours high. So these are levels. However, today is Friday, and because today is Friday, very often price can go just in some range. Consolidation can be very boring, and maybe price will not reach the high. So my plan with this trade is to close in some moment if I see that price is nowhere. So this is the trade of the day for today. And the same thing I had on euro dollar, but I because it's a correlated currency pairs, I didn't make the order there. But I just want to show how this beautiful from technical standpoint of view. If we make a trend line from a bearish move for euro dollar, we can see today that we had the price retest the previous trend line, and after that retest, price started to go up. So this is the one of the proofs that the technical analysis really works in trading, because this is not by accident. We really we broke up this trend line, started to go down, retest, start to go up. So Howard, you're completely right, because a lot of traders, when they see the market, let me remove these three bullish candles and just watch. It looks like it's a completely bearish trend now, and we switch to the bearish mode. However, price just reject that and start to go up again. So it's really pretty moved. So I hope that this price will be like this, and that will be bullish trend for today. So please, James, I skipped you. So please, if you have some opinion about all these charts and about your setups.
Yeah. All right, I won't talk too much about currencies because you guys are more in. I'm a currency trader as well, but nice to meet you, Howard. Haven't met you before. Yeah. Thank you for being part of this group and for being around. It's nice to see you. It's always nice to see you. If I'm glancing across the left-hand side, I've got charts all over my room. So I've got some running over there and over here. So it's not like I'm ignoring everyone. Can I put my charts quickly up on the screen, Igor?
Yes, please.
I've already racked them up there, so you should be able to switch over now that you're the official.
Yes,
all right. Yes. So let me just quickly concur with what you guys are saying. So we are in confluence or concurrence regarding currencies, and my general view is pretty much the same. And I'm not assuming just because you guys agree that I'm right, but it's good to know. And this is the dollar index, a long-term daily chart. And we're right in the middle of the long-term range, which goes back all the way to 2022. And the top of the range is around 110. The bottom of the range is about 100. So it's it's 10% range. And we've reached the top. We actually exceeded it briefly, but only I suppose you could call that a false break. We did try and hold below there on that first attempt through, but then we collapsed back down and moving down again. A couple of interesting things about the dollar is I don't think there are any real, I don't think there's a lot of impetus for this to go one way or the other, apart from one thing, and that's Donald Trump's tariff jobs that he's busy with. And the last time he was in office and the last time he implemented tariffs, this is exactly what happened. And we'd have to go back a long way on the chart, which I don't think this chart goes all the way back. Maybe it does, but let's not bother with that. But and that was, I've forgotten now. It's a long time ago. Can you guys remember? 16, was it?
2017, I think. 2017, I guess.
Yeah.
10, yes.
So I think at the beginning of 2017, we saw a very, very similar picture. And we could have a look at that if you're interested, but I don't think we've got time for that now. But basically, I think we get down to these order blocks and the Bollinger Band and the lower part of the range, which means a 400 pip correction down on the dollar index, if that happens, and I think it will, and therefore a 400 pip upside for the euro and the pound, roughly. Now there are obviously different prices related to the dollar, so they're not 400 pips exactly, but in that region, 3, 4, 450. So let's have a look at the euro daily chart, and I absolutely agree. There are my targets, those blobs above us into those order blocks, and I think that's pretty similar to what you showed there, Howard.
Yeah.
You said 108 and then above up into that range. I think somewhere up about around there, and but what we've got here is a very simple bounce off the 200 period moving average on the day chart. It's really as easy as that. We've got one little problem above us, and that's this 20-day moving average, always a good short-term indicator for momentum. So momentum's still not yet positive, although it's neither here nor there. We're kind of on it right now. Maybe we closed above it fractionally yesterday. But I think what I would allow for, and I'm also looking to buy the euro and or the pound, very much like you guys, but I think we might allow, so we've only had one, if we look at the 4-hour chart, we've only really had one test of that 200-day moving average. That's that dip down there. I wouldn't mind another retest of that and then a resumption of this uptrend. And that could take us, maybe not even quite that way, maybe just 76%, something like that, the last chance Fibonacci. And that would be down, I'm guessing, without drawing it on my charts, down around 107.50, maybe 107.40, somewhere in that region for a bounce back up. Maybe we won't even get that, and this bounce is already completed, and we're on our way already. So it does look fantastic for a long trade. And also, Igor, you showed your shorter term chart there with the breakout of that. I've lost my mouse cursor. You showed that breakout pullback of the 1-hour chart trend line. One of my favorite trades, my favorite types of trades, always on any instrument and any chart, is the breakout pullback. I just call it BOPB, and that's what you had drawn in here, Igor, roughly something like that. Didn't quite touch it at the bottom there, but we got really close, and that's a lovely trade. However, we may just need to get back down to that trend line and this order block one more time. What I said earlier when we were looking at the day chart, that would take us down to that 107.50 region and a retest of that trend line, which technically speaking, we have not had yet. So just keep that in mind, but we shouldn't get below that low if we're going to carry on moving up.
Yeah. I think you guys have got your trend line slightly in different places, but we get the point. That's not totally agree.
Yeah. So I mean, maybe my trend line's not the best. I'll admit to that. Sometimes they're a bit sloppy, but not sloppy, but just they're not. Trend lines are not meant to be perfectly accurate anyway, because the market often pokes through them one way or the other. But you can see we haven't quite got there. Maybe on your chart we have, in which case all good. And my chart, and we've got this order block below, and it concurs or confluences with that trend line. So I don't know if we'll get it, and maybe we're locked out already, but I'd kind of like something like that, just one more clear out of these two recent lows here. That's the sort of thing that currencies often do. More difficult to trade than stocks, not technically as sound or as fluent or fluid, and we do get a lot more jagging around. And I think we could just get that. But if we don't get it, we don't get it. And I'm short on the dollar yen already anyway, in lieu of that, I suppose. And then just quickly covering the pound, just to concur with what you guys are saying. I've got this downward sloping trend line that goes back about, 5-10 years. It goes on forever. You need the weekly chart actually to see where it starts. Maybe it's more than 10 years. That's 2015, that last touch over there. And look how it comes up. We talked about this last time, Igor, if you remember. Look, yes. and I said we may have to get back down to retest that breakout, and that's exactly what we did. Yes. And that trend line is about 10 years old, which is quite remarkable. It even respected it over here and over here and over there, just breaking out and holding support there. And now we've retested it. Maybe we could get another little retest. There's the 200 period moving average on the day chart, just under that trend line. So this whole zone here is absolutely perfect. And people will be saying, well, why would anyone be interested in buying European currencies and the pound, the euro, various other bits and pieces that are floating around that region? Not many, just the euro and the pound mostly. But in the light of what's going on with war and energy crises going on, cost of living, particularly in the UK, which was the worst in the world, why is everyone looking to buy the pound or the euro? And the answer is, I don't know. I just think that the dollar has got to come back into its range. I think it's probably just a technical play. I don't think there's any real impetus for any of these currencies for any other reason, in my opinion.
Yeah, one thing I'd just like to chuck into the mix there that not everybody's looking at is that since the dollar was kind of free floated by Nixon, Republican administrations have tended to see double-digit declines in the dollar, whereas Democrats have overseen the reverse. So it's interesting. I wrote a piece on it for, I think, just at the start of the first Trump presidency, and Trump and Biden actually did it almost exactly. So it sort of ties in for whatever reason. But the Republican administrations tend to oversee a weaker dollar for whatever reason. So
yeah, I think it's because people tend to think that the Republicans are inclined to. Sorry, Howard, I interrupted you. I think people are inclined to believe that Republicans, and particularly Donald Trump, are inclined to cut rates more than they are inclined to raise them. Perhaps one of the reasons, and also they're probably more inclined to be to apply tariffs and stringent monetary penalties on other countries from time to time. And the other thing is, I think they're pretty clever, and they know as well, and probably will work towards getting the dollar a little weaker, because that's good for the economy, not just the UK, the US, but the world economy, really. And if the world is doing better, the US will do better, and if the US is doing better, the world will do better. So, I think a lower dollar is probably just a good thing overall, around about 100 on the dollar index.
Yes. And I just want to add, just if we watch the period from the 2016 up to now, from the Brexit up to now, we are in some kind of the range. If we watch on the monthly chart, we don't have any bullish or bearish trend for the British pound dollar, euro dollar. It's a really every single year we have a 3 months of a bullish trend, 4 months of the bearish trend. We are just in some huge. It's a big, but it's a range. And there is one question just in comments from Andre. British pound breaking this 1.302 region, more bias may emerge. So I agree. If we break this region, I think the next target will be 1.31. 1.31 is one very important institutional level. For example, 1.31 was for British pound the highest high of the 2023. So I believe, and in the last year it was a very strong level. So I believe that we can reach that level if we break 1.302. But like I said, it's very hard to predict the longer term from major currency pairs. We can just trade what markets offer to us. So we will watch and make new scenarios, and this is the only thing that we can do.
Yeah. On the pound, we've also got obviously a very clear uptrend with uptrend lines like that. And actually, we've just bounced off that one perfectly. So yeah, it looks good. I think so. What I think is we're at 29.50 right now. So I think we could add 300 onto that, and that could take us up into this next order block right at this last swing high here at about 1.34. So yes, probably a bit of consolidation here above the trend line, maybe a quick fake break, retest that high rather, and then bounce off there and another move up into that zone. And the top Bollinger Band, that's this thin red line here. That's the daily 200 period Bollinger Band.
Yes.
That's it.
Well, good. You said you were you're short dollar yen. I kind of agree with you.
Oh yeah.
I think the yen has been a bit. I think the yen crosses have been quite strong by comparison. So dollar yen has not really been in a hurry to to follow the other ones. But I think that there is a stiff resistance zone around 151, 151 and a bit. The old swing low and the last swing high, a corrective high on the way down on that trend. So I think there's a big confluence of resistance that we're struggling in right now.
Yeah. So on the dollar yen, we've got the this pink Fibonacci zone above us. We've also got this market structure break where we broke structure here. So that's obviously a key level. And even though we've broken out of this short term, this is a daily chart on the dollar yen, even though we've broken out of the shortish term downward facing trend line, we've only moved up to that's the 200 period moving average, this purple one, and that's the 50. And whenever they're close, particularly the 200 and the 50, whenever they're very close in confluence, that's an incredibly powerful resistance level. But also look what happened when we got there. We've got a tweezer, almost not quite a tweezer top, but just about tweezer top forming here today. This is the day chart. We're short already. We got short a few days ago. I don't like shorting too early on the dollar yen because you pay a hefty overnight fee because of the carry costs that you can see on the top chart on the right. That's the 4-hour chart. That's where we got in. So we started off okay, bounced back up again, and just trying to head down again. But yeah, probably not the best one, but it's a difficult currency to trade, currency pair. What I do like, you mentioned the yen crosses, Howard, and this is the euro yen crosses. This is my general picture, my line in the sand. I'll be proven wrong if we break up through this top red line, but I'm pretty convinced this is going down to 144, and that is, well, it's approaching 2,000 pips down below us. It's not going to happen immediately straight down. It has happened immediately straight down before. This red line on the right-hand side is identical in length and angle to the one that happened on the left-hand side here. So it's not impossible, but I don't think it's the most likely scenario. But I think we could get back down here and break down through back underneath this trend line.
Yeah. No, I agree. And, that one.
Go for it, Howard.
Yeah, structure-wise, I agree. The bounce from that low. Yeah, I was say the structure. I agree that the bounce from the low, the end of your first arrow, the rebound is a clear ABC rally, 3 waves up, which is usually counter trend. And since that point, yeah, ABC. Since that point, we've just stayed in a range. So it looks like a bearish consolidation to me.
Yeah, yeah. And that's all I've got at currencies, guys.
Okay, I can share just my US dollar Japanese yen trade if you don't mind. I will just okay, I will remove the James. Okay, I will share a screen just to a little bit have a different trade here. So what's happened, I watched this channel of US dollar Japanese yen. I hope that you see on the chart. Just a moment. I didn't approve myself. I will do that. Yes. So I watched this channel of US dollar Japanese yen, and there was a breakout this week. So what I did, I went to the 30-minute chart, and I wait for the retest of that trend line. As you can see, this was the moment when we had retest. However, I was in the car in that moment. I didn't make the order, but it was perfectly because we broke a relative sentinel trend line. We touch retest this channel. Everything was perfect for entry position, but I didn't. And then I wait for another push down, and somewhere here on 150.1, I made a buy order. So I put the stop loss just below here, and I still have this buy order, and I put my stop to break even because I agree that there is a short bias when we watch potential short bias here, especially fundamentally if we watch Japanese yen and US dollar. If US dollar start to be weaker and euro dollar, British pound, or everything start to go up, there is a chance that US dollar Japanese yen can go down. Because of that, I'm break even right now. I'm on break even right now, and I will see what will happen here. But as you can see, I drew a trend line for US dollar Japanese yen, and I think if we are above this line, we can still on intraday level can see this as a still buy opportunity, and it's a little bit different, I admit, but I just watch this channel breakout and make this decision, and right now I'm around 50 pips in profit, but um, I don't know what to say. It's really tricky, and especially to trade Japanese yen pairs. A couple times in my life, I really see that as a bearish trend, and then just start to go in another direction. It's because my strategy that I use relative strength index indicator and drawing trend lines there to find a bias doesn't work on Japanese yen pairs. And I figured out that. So when I trade these pairs, I like to use the channels or retesting the channels or something like that. And this is the little bit tricky trade. So so what do you think about my decision to make a buy order for US dollar Japanese yen?
Well, I think it was good because you're 50 pips in profit. But Igor, I think if you look at that trend line, that longer term trend line that you put on earlier,
Okay.
that was an interesting trend line because, yeah, not that one. Yeah, yeah, that one. Yeah, yeah.
Okay.
So, and just zoom in into the right-hand side where we are, more or less, and just show the entire trend line. So, so you can see we've had, this is, I guess you could call it the fifth touch on this trend line.
Yes.
And, you know, you've got one to start, a couple, anyway, multiple touches, whether you call that 5 or 6 or 4, doesn't matter. But the more touches you have on any trend line, the more I like to see the third touch as being the most powerful, maybe the second sometimes, but it's hard to pick the second because you don't know it's a trend line by then. Third one is the best.
Yeah. Fourth
one and the fifth one, I start to doubt immediately, particularly when you see the price action on your chart there before that trend line. The bounce off the last touch was a bit weak, a bit muted, stunted. And we didn't get up to new highs. We didn't even get up more than halfway.
Didn't make a new high. Didn't make a new high.
I'm talking about right on the.
Yeah.
Yes.
Yeah. Yes. So you're saying it didn't make a new high?
And no, this is the new high, but push again. There's no high.
Just there.
Yeah.
Yes.
So yeah, I mean, so I would consider that to be a weak bounce and a threatening approach to the trend line. But of course, those are just probabilities. You never know. I mean, the trend line until it's broken remains intact.
Yes, it's a tricky sometimes to draw the trend line. We can use the line or the closest price only, but even that we are right now to break this trend line. So yes, it's not some special trade, but when I made it, when the price made this retest of the channel and start to go up, I really had some positive attitude about that trade. But right now we're really breaking this trend line. So, and it's weak on the relative strength index. When I drove the trend line on the relative strength index, I see the bearish divergence, the bearish move. And I know by the experience that usually when we are around 50 level and we have the bearish divergence, bearish trend line on the relative strength index, usually now the bearish momentum is the biggest. So we can get maybe accelerate bearish move down. So yes, this trade is not something, but I'm protected and I don't think about this trade anymore. So
that's the main thing.
Yes,
can I just quickly show my longer term on dollar yen?
Of course.
Just to sort of just to switch back to the sort of longer term currency stuff. So just 1 second, it should be coming through now.
Okay.
With a bit of luck.
Okay, I added.
Just coming through now. Oh, that's you. That's not me. I'm trying to.
Oh, Oh, sorry.
Oh,
I
It should be.
yeah, no problem. This is the
Oh, there we go. There we go.
part.
Okay, yes. So before, we looked at the ABC rally on the euro yen, which is typically counter trend if you're using Elliott wave. So what we've got big long term is the first leg down from 160, nearly 162 to 159.58, and then we got this ABC rally, three wave rally, which didn't make a new high. So for me, that is a corrective counter 8-9. Then we've got the first leg down, and then this rally we've seen for the last 2-3 weeks, I think, is a corrective second wave, which is just setting the stage for that push down, which we're kind of looking at. And I guess you, James, in particular, as you're bearish on the yen crosses in particular. So yeah, this resistance zone we were looking at. Basically the old swing low there and a corrective high within the downtrend there. So it seems to be struggling in that region. And today maybe we're going to do like a dark cloud cover, bearish engulfing, or whatever. Maybe even an outside day, quite possibly. The way if it takes out the low of the day, it could well be an outside day, which very often marks an important turn in the market, like this one here, for example. So yeah, that's kind of my kind of bigger picture on dollar yen. It's been just waiting for the thing to form, but I think once it goes, it could be quite aggressive. Once it does finally, once they give up the ghost and we start to see it, momentum shift to the downside.
yeah. Howard, that's a very good observation. Perhaps something that you might like to expand on. Sorry, I'm doing your job a little bit here, Igor. But outside days and inside days and engulfing candles, you mentioned dark cloud covers. I think some of the viewers might not know. I think those are really important candles overall.
Yeah. Just 1 second. Let's go back in there.
I will just
so yeah.
I will back the chart.
Should be coming through again there. Yep. Yeah, we got it. Yeah, so candlestick wise, it's really all about the real bodies, and the real body being the difference between the open and the close on a given session. The difference between the open and the close is the real body. So typically, when you get a larger red real body, if we're using red and green, against a smaller green real body, it engulfs it completely. That's usually quite a bearish indication, at least for the next couple of sessions. So for example, this one was quite a good one where we had a green up candle followed by, I guess, an engulfing red candle here, and then it accelerated lower. Another one here where we had a relatively small upward green candle and then an engulfing real body, where the real body pretty much eclipses that of the previous session. Although in currencies, obviously on daily, because it's 24-hour market, sometimes they're not going to be ideally engulfing, but the open and the close, for the most part, are generally about the same. So yeah, that was another good one to the downside there. So that's essentially the kind of thing that that can be a good indication for the next maybe 1, 2, 3 sessions.
Yeah.
Yes. I have one question, just and for Howard and for James. When I talk about engulfing pattern, because I made some tests just using the expert advisors on various assets there, and I changed the algorithm to work like this. If we have an engulfing pattern, I wait another candle to close, the candle after engulfing candle, and then I, with the risk reward 1-to-1, just want to see. I know that the expert advisor will not be so profitable or something like that, but I just want to test. And I realized that if I wait one candle more, my trades or my profit factor is much better. So I just want to ask you, if you trade, do you trade just when you see the engulfing pattern and of course a couple of triggers, or you maybe wait one more day when you see on the chart? What is your preference related to that trading?
Yeah, from my side, I think if you leave it for the extra day, then maybe you miss the first, maybe the biggest portion of the move you're waiting for. I like to get in on the break in the direction of the engulfing on the next session.
Okay.
Because
Okay.
because I think if you wait, I mean, for example, let's see, this one, for example. So if you were to wait for the close of this candle, you've missed the move.
Yes, it's the
So I think getting in on the breakout perhaps of the candlestick itself, putting a stop somewhere on the other side of the range is probably a good strategy.
Yes, it's okay. I just tested when we are in the resistance or support zone. So I tested only that candles, and I waited for one more just for confirmation. But yes, it's a little bit tricky when we have a good push. We need to exploit that as a manual traders. I just test this on the expert advisors, which it's a different story. It's a little bit different story. So I think that manual traders are better traders than robots. So even I create the systems, I still think that people cannot be replaced. So we have a question right now. I just want to answer the Andre again. If there is a bigger correction in British pound dollar at 1.28 and the dollar index hitting 105, is there a possible stronger reaction? So there is two price levels and answer of that. So who would like to answer this question?
Yeah, I think if we pull back to you go, Howard.
Correction to one.
Is that your final answer?
Sorry, I missed the last few words there.
Yes, it's 1.28 for British pound dollar. Is it be a bigger correction at that level? This is the question for British pound dollar. And for currency index 105, there is a possible stronger reaction?
Yeah, I think we've seen the low for the correction. I don't think we go down to 128. I think we do 130 and a half first.
Okay, so in my opinion, if we watch the British pound dollar, and if we see the push downside, but right now I don't see that. But if we see the push, I think that there's no much price levels there. For me, 1.276 and 1.271 are the latest one that can happen, the biggest move down. Because if we break and start to go below 1.27, I think that the bullish trend is broken for British pound dollar, and that it's everything is changed. The whole scenario is changed. So I think that this pullback that we had from 1.3015 up to 1.2870 that we had in this week, I think it's more than 150 pips. It was a really large pullback. And because of that, I agree with Howard that I hope that we can see the new highs in the next week. And James, what do you think about dollar currency index and level 105?
Yeah, I think, can we just go back to my chart there?
Yes, just
let me quickly switch back to the.
I just need to remove. Okay.
Are we on?
We will be
105 on the dollar index. Yeah, look, I mean,
Yeah.
I think that's kind of let me just get the day chart. We don't really want to exceed. We don't want to exceed this 200-day moving average now. So, but I don't mind a retest of it. That's at about 105. But we don't really want to close above there. And if we do, we might have to amble back up into some of these other sort of, there's a swing low, the moving averages, longer term moving averages. and another market structure break and order block. But ideally, we'd hold beneath that 200. That's at 105. And that would mean, and we're at 104 now, so 100 pips at the most. And we could then allow for the pound to come back 100 pips. So, 29.60 to 28.60 back down here. Probably the top of that trend line, maybe a fraction lower to the 200-period moving average, but we don't want to see it going below. I think the line in the sand on the pound, as you said, Igor, is probably 127, and that's this rising bottom trend line that we've now broken up. We have retested it once, a little bit, but not a big retest, just break up, tiny little retest, and up we go. Massive rally. And could we get another retest of that trend line? Possibly. Or a break through this very steep trend line, a retest from underneath, and then then down to that trend line, or So I don't think if we get down to 1.28, that would be a great place to buy more or take your first trade. But if we get down to 1.27 and we see a big reaction off there, that might be even more exciting and more interesting and more volatile in the upward direction. But I think the way it looks right now, it's more likely that we're going to get into that little blob there before anything else, which is 131-ish.
Yes, this is the very strong level. I think the last year in 2024, when we was on 1.34, that level 1.31 was a really strong level. I even wonder that we'll start to go bullish again, and I think that that previous support, very strong support, now can be stronger resistance. So I really like to see 1.31 as important price level for British pound dollar in next days. So I think it will be interesting for trading. Just I want some movement in some direction, because this sideways market can be very, very boring.
Yeah, I mean, Igor, look at this collection of candles. These are day candles starting on the 5th of March. And we're now at the end of March. And that's a whole month of trading just wasted, really. Going nowhere. And traders don't like this, so they get frustrated. Especially, I used to work for a bank in Europe, and I know what happens to traders on a trading floor when this happens. After a month of this, they get reckless, they get bored, they get annoyed, they don't know where their paycheck's going to come from because there's no bonuses for that month, whatever. So this is frustrating a lot of people. And the next move, of course, we're getting a Bollinger Band contraction. We're getting, everything's kind of dying down. So I expect that the next move, we could get there today even, I suppose, or Monday or Tuesday. But if we do get a quick dip down, it'll probably be equally as fast. Quick sudden spike and then up to there. And probably up to here, actually, 134.
Yes, it's October high, yes.
Yeah. So... But as a swing trader, I've got to sort of, I could go long on both the euro and the pound. The euro is looking great now. There's the hour chart on the euro. Could go long on both of these now because I don't worry too much about a large stop, because I start with small positions and I edge into the trade. And once I got my line in the sand, it could be 200 or 300 pips away, my sort of hedge area or stop loss area. Yeah. But I'd like to really get in at a slightly cheaper price, because these hour moves are quite dramatic, a bit overdone, really, I suppose.
James, I have one question for you, because there are a lot of traders that will watch maybe later this session about that hedging strategy that you have for the major currency pairs. How do you do that? Just from the technical point of view, just for the traders that watch this video. And of course, you have a great experience and knowledge, especially your past work abilities. So please, if you can share that.
Yeah, so I'll give you, here's a great example, right? Here, let's say, and I can't do it, I would do it on the demo account if I had an account available, but I don't. But let's say I was a euro bear, and we've reached this swing high. It's not a great example, but there's a swing. There's a bit of resistance where we are underneath these lows and there. And let's say I want to go short. And if I was going to go short, this is probably the place I would be looking for, maybe just up to the 200 period moving average. But let's say I chose to go short here for various reasons, and I enter the trade. So I'm just going to illustrate that with a downward arrow. So I'm short on the euro, theoretically, short on the euro at, what's that price? 108.20. Now, I'm prepared to hold that short, maybe add a little bit more up at the 200 period moving average, but I need to have a line in the sand somewhere saying once things go against me by this amount, I need to do something, get out of the trade and mitigate my risk. So I just put a line in the sand, and I'm just doing this very roughly because it's not a proper analysis. But let's say it's there, right? Above those swings. And above the 200 period moving average, safe distance above there, allowing for a fake out through there. And we've probably got some other swing lows along here. But let's say that's my line in the sand. Now, I'm going to hold on to that in the hedging scenario. I hold on to that trade. I add my little bit of extra tranche there. I'll add another little bit underneath my last chance, because this trade, if I get in another short here, just before I hedge or stop the trade out, there's almost no risk on that trade. It may be just 30 pips or 20 pips or something. So I'll always add another position on just before my line in the sand, which initiates my protective action. So and these will be maybe a 25%, 25%, 25%. So I still wouldn't have a full position on this trade at this point. And if it breaks above that line and does something like this, I'll kind of try and illustrate it quickly. If we move up from here, we'd probably bounce down there a little bit and I'd still be in the trade, but then suddenly we shoot up. At that moment there, I'll immediately, and it may not be the entire position, but most likely and normally, I would hedge the entire position, which is now a 75% position. I don't trade with leverage, so that would mean whatever my full position is, and it would be less than my account size in terms of size. I don't leverage my account 5 or 10 or 15 or 20 times. There's a different way of trading using that system. But as a swing trader, I can't afford to use leverage. So I'm not even in a full size position, not even at 1-to-1 leverage at this point. So, and you might say, well, how do you make any money if you're only trading small position sizes or you're not using leverage? But I trade about 36 different instruments. So I'm always in about 10 or 12 and not always correlated. And I often use them to hedge against each other. So for example, right now I'm short on gold, but I'm long on silver. And so my silver trade is the hedge on my, or the short gold is the hedge on my long silver trade. And so I've got different instruments going on. So I tend to reduce risk and mitigate risk by diversification, multiple instruments. In this instance, I would then put, I would take a hedge position on that breakout, just wherever my stop or hedge level is, maybe just above that line. I would then immediately hedge the entire lot. And so I've got short positions, those ones, and one long position equal to all of those ones added up. And now I can just sit back and relax. I've now stopped the bleeding. I've stopped all risk growth. I've locked in a certain amount of risk. It would normally be under 1% in my case, but your risk level might be different. You might be 2%, 3%, 5%, 10%, whatever it might be. For me, it's under 1% generally. And I've now got a 1%, let's say it's 1. I've got a 1% risk that's locked in no matter what the price does, no matter where it goes, and no matter how long I hold this hedge open for. There are overnight costs holding these trades. Generally, the negative costs of holding a long euro will be not quite offset by the positive contribution by the broker for the short trades, but more or less mitigating the holding costs as well. So I'm now no longer holding a short trade. I'm not paying those overnight carry costs, and I've locked in my risk at a predetermined and fixed level, which will not change until I do something again. And that's kind of the way it goes. Now, I might, if I've changed to long, in other words, if I think now the euro is now in an uptrend for whatever reason, and we're now looking towards much higher levels, I'll gradually edge out of these short positions as we move up. either by adding on more long positions as we break out through levels, pull back, and carry on moving up. I could add to my long position, or I could just start taking off my short positions bit by bit as we move higher. So let's say we move, I don't want to take too much time with this, but let's say we move up, let's say we pull back, move a little higher. And at that point, maybe I'll have added on another long trade there. And at the same time, taken off one of these short trades for a loss. So now I'm building my long position and edging out of my short position. And as we move higher and higher, I'll gradually either reduce these short positions or add on new long positions, and then shift the weighting of my hedge towards the long side. And it's not always, but sometimes it's a gradual process of reducing the short side of the hedge and building up the long side of the hedge until the short side is all but gone and the long side is much bigger than where it was when it started out. Of course, in order to do that, one needs to be very careful. Adding to a winning trade is not as easy as adding to a losing trade. We all know that. Psychologically, it's more difficult, and timing-wise, it's also a little bit more difficult. So, that requires a bit of care and risk management, but that's the overall idea with my hedging strategy.
Yes, beautiful. This is the new way of trading that I heard, so I didn't use it before.
Just a quickie. Dollar yen's approaching yesterday's low, which will make an outside day, bearish outside day, 150.05. Should we break it? We're on top of it right now.
Wonderful.
So could be a trigger there.
Yes.
Yeah. Are you looking to take a short trade on this, Howard, or are you already short on this one?
I'm already short.
Oh, okay.
Yeah. Looking
from roughly the same price as me, up around about here.
Yes. My price is close right now.
Yeah. Yeah. Stop at 50.80. Short. Yeah. Kind of relatively small risk. So just looking for the thing to break and accelerate with a bit of luck.
Yes.
Yeah. Okay.
Yes. There is one question right now. And the question is from Andrew. He asked, right now, key moment, 1.2960 for British pound dollar to buy or to sell. I just want to give my remark. So I wouldn't buy, neither sell, because I don't like the price level, neither for buying, neither for selling. So I would like to wait either for pullback to buy, or maybe some extension to sell. But like I said, I have a bullish bias. And when I have a bullish bias, I want a lower price to enter into that trade. So this level for me, it's not good to enter, can be very tricky. What do you think, Howard and James?
Yeah, well, we got a big order block right here. Yeah.
Yes.
I guess if you didn't have a position right now, you wanted to buy, maybe wait until you're settling.
Yes.
Above it.
Yeah, you could do one of two things. If you were determined to take a long trade here, I would do one of two things. Wait for this sort of thing. Like, maybe that's a bit extreme. Let me restart. It's not gonna. Oh, I could do that, I suppose. You could wait for a breakout. So we got a big order block here, which is quite a neat level actually. So you could wait for something like this. It's also wrong. Like that. Pull back to the top, and then a new bullish candle should form around here. Then you could get long like that. Or the other alternative is a breakdown. I've got all these Apple screens, and when I move my mouse cursor across it, it goes onto some of the other screens automatically. It just makes one big long screen. So sometimes I lose my mouse about 10 meters to the left. But the other, very annoying. The other option is just wait for a dip down to there's the 50 and the 100 period moving averages on the hour chart. If you're day trading it, there's a nice support level here too. So maybe you just get a retest of that in a bounce.
Yes, and I see the same question from Ali right now in the comments. should we buy the euro dollar right now? So I think the answer is the same, because we're in the bullish push for British pound dollar, for euro dollar, and I think it's a little bit smart to wait for some better level, because right now we are on a weekly high for euro dollar. So okay, we can buy on resistance, no problem, but can be really tricky. I remember a lot of people told me when I was a beginner trader, so they told me never buy Friday's high, never sell Friday's low. So I stick to that, because Friday is the last day in the week, and it's not the day when we will touch the sky. So this is the my opinion about that.
Yeah. There's also the 200-hour moving average right there. We're just on it now.
Yes.
So we should get a little reaction here, I think.
Yes, it would be nice.
Yeah. That's what I've got on currencies, Igor.
Yes. And James, do you have something outside the currencies, maybe something related to S&P or something else that you can share?
Yeah. I'll show you some. I'll give you a picture of some pain. So I'm long on the NASDAQ and the S&P. Not the S&P, sorry, just the NASDAQ, and a couple of these names, including Tesla and a couple of names. These are not large positions, but I'm quite not a huge position long here, but enough to make me annoyed and a little concerned. And what's happened here on the NASDAQ is that we've literally broken down through this. Let me just zoom out. Broken out of this big long-term channel, broke out quite convincingly, retested it from underneath, rejected once. The second retest broke up through inside, lovely, but only to the 200-day moving average and this big consolidation zone, this yellow ribbon across here. And we were talking about outside candles, and this is all three. This is an outside bearish candle. It's also a tweezer top, and you could also call that an engulfing candle or a dark cloud cover, whatever you want to. It's kind of a bit of all three. So it's very bearish, but I thought we could just get down to this gap. There's a futures gap right here. And
it shot up from there, didn't it? Yeah.
We bounced off it. Yeah. We bounced off it. Yesterday, we touched the bottom of the gap, which was perfect, which is great. And we held that pretty well, a lot of intraday up and down. And today, I thought we could just sort of get down to that yesterday's low and maybe hold that and rally up, but not to be, collapsing down quite fast. And I suppose there's a little trend line here, but I don't hold out much hope for that. The best thing we can hope for, we've probably broken down through that, best thing we can hope for is a 78.6% Fibonacci hold, and that's the bottom of this yellow block and these previous lows, and that's the 78.6% last chance Fibonacci level and these swing lows. So if we don't bounce between where we are right now and that yellow line, the bottom of the yellow block, then I expect we should probably retest the lows again and maybe look for a double bottom. But more likely, and what often does happen, is we might have to move just very briefly down into this next order block and closer to the lower 200-period Bollinger Band. But let's see how today closes. It's the last day of the week and the last week of the month. The last is Monday. I think Monday's still in March, isn't it? Yeah. Friday, yeah. So yeah. Not the last day of the month, but pretty close. So we'd like to see a bullish close to the week. Those who are long on the stock markets, bullish close to the week and the month. But right now, it's not looking like that. And we'll have to see if we get a late Friday rally, a to the moon late Friday afternoon. But, it may not show up. We saw exactly the same thing on the SPX, on the S&P, just that daily gap there, that futures gap right there. And we held above it yesterday, tried for all love of God to get up above the 20-period moving average and failed. And today we're just falling back. Once again, there's that 78 point. That's the 6. This is a little bit different. The S&P hasn't got quite as low on its retracement as the NASDAQ. We only got to the 50% and we're heading towards the 61.8. The 78.6 is much lower. compared to the NASDAQ, where we're almost at the 78.6 down there. So S&P slightly stronger, but a very similar technical picture. And I'd really hope to see and like to see a bounce off that yellow block in both cases, the 618 fib in the case of the SPX, the 786 in the case of the NASDAQ. And if we do, then I'll be once again looking to add to my long positions on both of these, looking for a rally, perhaps back up to, and there are a couple of options on this. Are we going to resume a bull market, or are we just going to do a bear market retracement, bounce back up into these moving averages and order block, maybe even just as far as the 200? But I think even in a strong bear market, we may retest these lows, test that order block, bounce up very sharply. Most of the strongest rallies in any market are bear market rallies. So, you know, don't be surprised if we suddenly get a surge up. Doesn't mean that we've entered a new bull market. It just, that's what bear markets look like.
Just jumping on the stock markets on the quick. The rebound from the swing low on the S&P kind of topped out exactly at the double bottom breakout, but double top breakout level, which I think was the January the 12th or 13th low. Yeah. So that, literally it's kind of retest of a double top breakout point, and down we go again, you know. And a similar kind of thing on Bitcoin for whatever reason. Like they seem to have been doing similar kind of things, where we've seen a corrective bounce and it's stalled exactly at the same point, the double top breakout point. So just out of interest on that one.
Yeah, I mean, you're right, Howard. That's an absolutely classic. That was the S&P. An absolutely, this is a technician's copybook example, isn't it? I mean,
yeah.
So, you know, why am I long on markets? But talking about
they're probably wrong.
Bitcoin's an interesting one. I've got the Bitcoin futures on here. This is the CME futures, BTC1, and also, you know, not great. But what's just happened while we've been talking is we have a tiny little CME gap here. You can see, very tiny, and we've just tested, maybe not quite, maybe another, I don't know, what are we down at? 500. We've got to get down to 84,300 and some change to test that, the bottom of the CME gap. We've now broken down through the top of it, heading down towards the bottom. That was always likely to happen, however small and insignificant that looks, and however you might think that we don't have to test every single gap. Well, actually, Bitcoin generally does, even if it's a small gap. And that's where we are. That's what we're busy doing right this moment. If we don't hold 84,300 or maybe 83 at the most, that's this last little tiny swing low, then we're in a bit of trouble on Bitcoin. We might see this retesting these lows or even moving down towards the previous all-time high and the breakout level, which wouldn't surprise me enormously, because that's what markets do. Get a breakout of a pattern, rally, retest, and resumption. We haven't had the retest yet, and as much as we hope not to have it, we may have to. And have we filled this gap here? Yes, we have, completely, perfectly, to the pip almost, or bip. So that gap is filled. We don't have to worry about that. But this little one here is busy being filled. And unless we bounce somewhere after that is completed and filled completely, we're in a bit of trouble on Bitcoin.
Yes, and I remember that Paul, crypto trader, just talked about this Bitcoin, because the last 2 weeks we had some bullish attempt, but a lot of traders started to go long on Bitcoin, and it was a mistake because on the daily chart the main trend line wasn't broken. So we are still completely in a bearish trend, and we need to wait to see the breakout for any other push up. So you're completely right.
This is my Coinbase chart, my actual trade. So I was fortunate. I got long at the bottom here. That was my last tranche. I do have some more up around where we are currently, but that was my last entry, and that was really simple. That was just straight off the trend line. And notice that's the third attempt of this little trend line. So there's the first attempt. I'm calling that one attempt there. This is the third attempt. As I said earlier in this session, It's my favorite one, the third one. And most of the time it holds. You know, it has held actually somewhat, but you know, maybe we have to get back down there again. But this is the day chart. There is one positive aspect of this on the Coinbase chart, at least. The futures chart doesn't look quite as good, but there's a tiny little short-term trend line that we've at least broken out of the first angle downward trend line. We haven't broken out of the second angle, but you know, we're moving into this corner. We'd like to hold this horizontal support line. That's the basically the top of the CME gap and a clear support line. But if we do break down further than this last swing low where my green arrow entry is, I mean, this whole zone here, this whole area is devoid of any resistance or support, or, you know, it's just a massive gap.
Yes.
I was long on this breakout. I was in Zanzibar and trading without proper power and internet. I was running around trying to get internet, and every time I looked, this price just went higher. And very fortunately, I didn't have to do anything. And it just kept on going up, and it was the middle of the night. I was trying to find internet all over the show, but and then we got into this, you know, double top consolidation zone. But there's not a lot of, there were no, you know, not a lot of activity here, despite the movement up. Obviously, people adding on long positions as we moved up, but you know, it's still a bit of an open space, which worries me, below that green arrow down to the previous all-time high. Just a bit of a liquidity gap, I suppose you'd call it. It's not a CME gap, but it's certainly a lot of traders got left behind, and an opportunity missed gap.
Yes.
So let's hope we hold this CME gap today.
Yes. Yes.
I
just wanted to share my chart related to Aussie dollar, because we skipped the Aussie dollar today.
Yes.
But, yes. Of course, nothing happens there, but we need to respect this currency pair too. So I will just show you right now, just to approve the chart. Yes. Okay, first I need to this chart approving. I'm doing that, so this is why today is so slow. Yes. Okay, so as you know, just I think maybe 3 weeks from now, I entered into the buy order for Aussie dollar. My stop loss is 0.608. My optimistic target is 0.69. It's a huge winning trade if I get it. And right now I'm in this triangle on a daily chart. Nothing happens here. We are just oscillate here. I didn't close my trade. I think that if we are above this trend line, we can still go further and touch the higher level. So I monitor the news in the Australia related to economy. From the news related to the GDP was better than expected. All other news are positive. I read that a lot of economists talking about maybe the Trump tariffs will bring that some metals price will go higher, and because the Australia is big exporter, they maybe make more gains because of the some of the tariffs. Of course, it's a little tricky to explain what will happen there, but I think that Australian economy is well. I think that technically this chart is still in bullish mode. Even this is the little bit sideways push, sideways oscillating. But on daily relative cent index on the daily chart is bullish. My trend line is bullish. I admit that we are in some triangle pattern right now, but we oscillate around 0.63 level, and I want first to reach 200 moving average, and then to see more gains up to the last year high. So this is my opinion about Aussie dollar. What do you think about my trade and the current conditions of Aussie dollar?
Yeah, shall I? I like it. I think it's been underperforming the euro and the pound and the other dollar majors since the stock market topped out. For some reason, the so-called commodity-related, the Aussie and the CAD, and I guess the Kiwi by implication and ties, they haven't done the same thing as say the euro and the pound against the dollar. And I think that's because the stock market has basically been trending down since the pretty much the swing high on your Aussie dollar chart. What was the date on that? February 21st. I think that was the top of the stock market. So the risk off type thing has perhaps kept a lid on the rally that it should be happening on this thing. But I think eventually once the pressure's off the stock market, then I think Aussie should start to do what you want it to do. Join the rest of the dollar majors.
Yes. And what I watch this Aussie dollar, Kiwi dollar, and US dollar CAD as the commodity currencies. For me, they're slow burner currencies. Always so slow in all movements. So I don't like them to trade on intraday levels. I can only make a swing trade when I trade them. What is your experience with trading these commodity currencies? Which time frame do you trade usually?
I like to hold things for a couple of days. So I'd say probably these are not the best instruments for that kind of thing. I think maybe they're more longer term. But because there's not a whole lot of volatility compared to say the other ones, the European ones and dollar and the yen crosses.
Yes, the same thing I think too. So very, very tough to trade on intraday level. It's intraday session. So I will stick to swing trades when I talk about Aussie dollar, Kiwi dollar. Yes, it's a slow burner currency. So this is the and I watch a lot of things outside the forex market. One of the things that I watch, this is something that I watch last couple of years. This is my longest trade that I have. I have a trade 2 years old, like a kid. So it's a separate brokerage account. I'm trading silver. So what I here figure out is that this pattern from the 2012, I think it's like a cup and handle pattern. So as you can see right on the chart, and I believe fundamentally I enter in this trade. I entered here just to show where I entered here. It's right here somewhere after the breakout of this trend line. So I entered when I read the text that in European Union and the whole world in the future, all solar panels will have silver as a material there. And we know that silver and gold we use as a jewelry for the jewelry. And for the last couple of years, silver will be really used more than ever as a material in solar panels, as it's our future. So this was the reason why entering so long trade. And it was the level around 25. Now I'm 34. And I would like to see this high from the big crisis around the level 50. So we are far away, of course. But for me, silver is same interesting as gold. But this can really be the very good hedge against inflation, and everything is a gold. But I think that traders a little bit underestimate silver, maybe because of the moves that really slower than for gold. And I just want to ask you about silver. Do you trade silver often, and what is your opinion about silver? Please, James, tell me, because you told that you have a silver orders.
Yeah. Put my charts up there, Igor, please.
Yes. I will do that. James.
Alrighty. So silver. All right. Well, here's a weird thing. I'm long on silver, but short on gold. Actually, I have 2 gold positions. Let me just show you quickly. The other one I entered earlier today, actually about 4 hours ago, right there. But let's talk about silver. I noticed on your chart there I don't have that gap, Igor. You've got a gap somewhere down, I don't know, somewhere down here, there's a gap. But anyway, that's a little concern. But yeah, I'm generally bullish on silver. So I'll give you some, I don't know if you've got an X account, Igor, but if you do, and
Yes,
you're going to tweet something about silver, okay, I haven't got the long-term chart here. Anyway, I put up a tweet, it's about 3 weeks ago now, that I was buying silver. My target was $60, and which is above that swing high, that all-time high of 52, I think it is. And I got a lot of ridicule on X. I'm going to try and, let's just get a different chart here. I'll get the Oranda chart, and I'll show you if I can find it. Actually, Oranda is funny nomenclature. Let's go with XAG. Oranda. And I'm just going to switch us to a weekly chart. So, yeah, so there's a couple of occasions. This is interesting. So we got there, look far across to the left-hand side here in 79. I don't know if that's real or not, but it looks like it. I wasn't trading at that point, obviously. But we got up to $48. And then in 2011, we got up to, let's call it, well, it's $49.80. Let's call it $50. And look at the length of time between that swing high and this one, a long time. I think it was about 30 years or something.
yes.
Got it 1980, 30 years, right? And then look what's happening now. It's only about 10 or 12 or 15 years since that, 14 years since then. And we try to do the same thing. So the frequency or the gap between these ridiculously wild rallies has reduced if we repeat this again. And we definitely have that cup and handle formation that you spoke about. And we also have this long-term, beautiful rising sort of channel underneath us on this week chart, which has provided support since 2000, a long time ago. And I mean, it's extreme from $50 down to 12 or 15. But still, we've kept above that channel. It's like a big, thick trend line, which is still in play. And we're now starting to form a steeper angle. We've been long on silver since, we've been frequently long all the way from these order blocks down here. But we've been taking profit at these highs, faffing about, everyone's a bit negative about silver. So one gets influenced by, everyone, I say $60. Everyone says, well, it's going down to $15 or $20. I don't think so. But it does put a bit of a damper on your ideas sometimes. You shouldn't read too much of that stuff. But so that's what I think. So we're long again now at 20. Where we get long at $32.10 or something, and aiming for that much higher level. And I think we could get up to $50, but my target is higher at somewhere up here. But I'm going to settle for 60 to start with.
Yes.
Yeah. So that's it. So luckily we're in a nice, we've had lots of good long trades on silver. I'm not so convinced about gold though, and this is what is worrying about silver. And that's why I'm part of the reason why I'm hedged, because we have a long position on silver, but now two short positions on gold, roughly equal in size now. The total that size is roughly equal to the total of this long position on silver. And gold, at some point, and I did an essay on this about a week ago, at some point, gold is going to have to correct and come back into probably a 38 or a 50% correction of this big rally, which would take us down into this sort of pattern. And we'd have to be expecting a move down. I don't know how far it'll get, probably just down to 2,800 or so. Yes. And on an extreme dip, maybe slightly lower. But once we get down there, we're going to form this broad range, which will last for 3 to 6 months. And we'll be trading between, let's say it's 2,800 and the top, let's say it's 3,080, which is where we are now, maybe slightly higher. Maybe let's call it 3,100. So the top's 3,100, the bottom's 2,800. That's $300 range. And I think we could trade within that for about 3 to 6 months. And that means this zigzaggy line, maybe not quite as negative, maybe more across the page than downwards than this. This is my initial thought, and I'll redraw this at some point when we get some clarity on it. But the reason I've sold here is because we got blue sky above us. We've got no obvious resistance levels. But I always look at the 80 and the 20 levels on every chart that I trade, and we got to 30.80 on gold, and I sold. And the reason is just to top up that position, get a better average price, and to complete my hedge position against silver, which could also come back in. If silver does that, I'd like to be able to benefit and capitalize on that move down in silver by capturing some of it on the other side, on the other chart, on gold, and keep my long trade on silver, just in case silver goes ballistic and takes off. I don't want to be left behind.
Yes, smart strategy. Yes, beautiful, beautiful. And just to say that we are on the end of the session, so people, I want just to tell you that I wish you a great weekend. I wish you to rest and to have a lot of good trades next week. So this is it. Bye bye. See you next week.
See you guys. See everybody.
Yeah.
Have a good weekend.
See you, Igor. Thanks. See you, viewers. Bye, everyone.
Take care.
Take care.
Paul, how are you, man?
Jannie, good to see you. I'm all
Always
right.
good to see you. How was your week?
Pretty calm, actually.
Yeah.
How about you?
Yeah, not too bad. I guess on your part, I'm not sure if you. Well, I know you trade more than just Bitcoin, but I see there were not that many opportunities apart from Monday, really, for an opportunity to the upside. Maybe Tuesday as well. I think there was a nice little pullback and opportunity there for Tuesday as well. But today looks like that consolidation on that 161.8% Fibonacci retracement level. It failed from that level, so it's a bit of a drop from that level. But we'll have a look at all of that just now. I just quickly want to share my screen if you don't mind.
Of course.
Okay.
Show us what you've been looking at.
Oh, wait, hang on. Okay, can you see my screen?
I can, thank you so much.
So I'm going to start with the pound US dollar, if you don't mind, because that's what we've been talking about yesterday in the third session. So we basically had a really strong rejection from the daily support level. So on the daily, we actually hit the low of the range, and then it moved up. And then on the daily itself, it engulfed the previous bearish candle. So, and how we left last night on the third session was this very strong push to the upside, like almost like a, wouldn't say straight line, but you know what I mean. It's maybe some candles with wicks, but mainly just a very strong push to the upside. So last night, I've identified the low and the high, and I just drew these Fibonacci levels. To point out some potential pullback areas where you would want to look for a long again. Does that make sense?
It does. Yeah, it's pretty clean.
Okay, so today it did pull back to this 50% level, actually just lower, and then it pulled back up and it found resistance at this high here. Now, I did actually record this trade, so I'm just going to show you exactly how this trade played out in real time. Okay, so right, so that's the 50% Fibonacci retracement level. Once it hits that level, always just remind yourself that these levels are just key levels where you want to start to pay attention to price action. You don't just buy because it's at the 50, right? It's a key level where you may start to get interested in the price action. So yeah, I'm looking for some sort of clue that it's going to start to reverse. But you can also see that this is bang on this previous low here. Okay, but I was looking at the Fibonacci retracements specifically. So yeah, I can see that we are getting some sort of support here, but it's not ready to. I'm not ready to take a trade yet. What I want to see is I want to see the new candle actually breaking this last closed candle's high. Okay. That's what I want to see. So let me just play this video. Okay, and on the half an hour, that's the half an hour time frame. Nice support level, and I'm just showing that this cluster of candles is also an area of support. And yeah, now I just want to wait for it to break out. I'm just going to forward this. There, I zoomed in. I actually drew a horizontal line so that if I can see it's peaking out of there, then I'll take the trade. So let me just forward this. Oh, okay. Maybe rewind a little bit. Okay. I'm going to show you where I get in. Okay, there. So it pierces through there, and there I place my stop loss. Okay, so my stop loss is just below that swing, because if it fails here, that's when I'll be wrong. Because I believe now it's turned. So my take profit is at that, not the wick of that candle, but the two bodies here. Okay, so that's where my take profit is. And I'll explain why my take profit is there and not higher than that. Okay, so this is a different time frame. That's the 1 hour time frame. You can see that you're getting that rejection. I'm back on the 50. Oh, that's the half an hour. That's the 15-minute. So I do flick between those time frames. Actually, ideally, I like to see them all at the same time. But in this case, I'm just like Okay, this is the 4-hour time frame. Yeah, you can't really see any bullish action, but the clues are coming from things like the Fibonacci retracement level, the fact that we had just had a straight rally to the upside, and now we're pulling back to a key level, and now I'm timing my entry on the smaller time frames, but I want to see ideally more than one time frame telling me the same thing. So we got it on the half an hour, the 1 hour was reversing, and then on the 15-minute, again, when it broke that high, that's when I got in. Okay, this is the 4-hour now. Now you can see that this candle is not, now it's reversing. Now it's obvious, but it's a bit late if you just looked at the 4-hour time frame. And again, I'm just pointing out here, the daily time frame did engulf the previous candle's body. So there's all these bullish signs. Okay. Okay, so that was the close of the 4-hour candle. It's a bearish candle, but the body of the candle is closing inside the range of the previous candle. So it's not engulfing it, if that makes sense.
Yeah.
Okay, so there we get it pushed up to the upside. This was frustrating because it came so close, but it didn't close the trade and profit. You'll see it now.
Happens all the time.
Here we go. Right, look how close. I don't know if you can see the red take profit
No, I
line.
can see it. I know that tiny little gap well.
Yeah. So I mean, I ended up having to wait like I think another 45 minutes from that point before it eventually hit my take profit. But it gets a little bit more tricky from that point. So this is where the trade management comes in. You'll see. I'm also well aware of the fact of this bullish candle count. I know it's not gonna. You don't get like that many bullish candles in a row. There's got to be some a little bit of a pullback at some point. So that's the only thing. I'm like, oh, this is not good. Okay, so let me just forward that a little bit. Okay, so there's the pullback on that's the half an hour time frame. So let me just go back a little bit. So yeah, okay, let me just pull. Oh, sorry, guys. Okay, let me just play it again. I was putting this video because it was much, much longer, and I switched between markets and and time frames, and obviously I'm trying to show the pound US dollar, so I had to edit the video, and I was like, oh man, I've got like 5 minutes left.
Welcome
Anyway,
to my world.
the 15 minute is now rejecting, so this can cause a lot of like doubt. It's like, should I get out? Right? Should I get out yet? Is that the highest point it will go? So what I do here is I look at the half an hour time frame. It's also pulling back. Okay, but I pay attention to the strength of the candle itself. Okay, yeah, there I move my stop loss to. Oh, I'm going too quickly here. So this pulled back, and then this candle pushed right back up, missing the take profit by more or less the same amount. And then it pulled back. But what I could see was that it's holding the range of this candle. So I'm like, okay, I'm moving my stop loss, or my take profit, if you will, my stop loss, to below this candle. So if this candle fails, then I think it's probably not going to hold. And then I'll take less profit, but it's still a profit, on the trade. Does that make sense, by the way?
Yeah, I mean, I would have seeing it struggling. I would have just taken it just without any doubt straight away. Just like, who cares?
Yeah. I mean, I think that will be down to each trader will be different in that regard. But I thought it could very easily go to at least that high, and then that's a very good place to take profit.
Yeah.
Okay, so how much time is left? Okay, so I think it's about this. Okay, so there we go. Okay, but any moment now.
Come on.
That wasn't a. I know. But in the but this wasn't a big trade. This is like to be exact, it was a 1 to 2.25 risk reward ratio trade. Okay. Now, to get back to what I was saying earlier, why did I take profit there and not, at a much higher level? Why didn't I leave the trade open? The reason for that is never lose sight where you are in the big picture. So if we go back here, let me go to the 1 hour time frame. So that was the support level. These Fibonacci levels I drew, like I think on Tuesday, and it was based on the monthly candle itself, the high and the low. Identified the levels where it can potentially go. That was the first level, which is the low of the daily range. And then just below that, the 38.2, we got the 50 and the 61.8. Now, the reason for those levels is because if it breaks through this level, then what? Well, you've got something in place. You've got the next level to look at. And if it breaks through there, you've got the next level to look at. And what do you do at those levels? You look at price action, just like I showed you in the video. How does price action behave at those levels? And then you look for that confirmation of it actually turning in the opposite direction. So in this case, it did bounce off. It actually just missed it. It didn't actually quite touch it, but this is not an exact science. It's a level of interest. So you do need to pay attention once it gets close to that level. There was a beautiful hammer formation there. That's good enough. But as I mentioned yesterday in my session, this candle formed between midnight and 4 a.m. when I'm sleeping that time most of the time.
You're not trading 24/7? What's wrong with you?
Not anymore. No, those days are long gone. Long gone. I don't do that anymore. So that would have been definitely a candle I would have been interested. Even this candle here, I would have been interested in this candle. But the problem with this candle is, if you know, like what I would like to see is that I see the candle formation and then I want that final confirmation of the new candle actually breaking out of the previous days. In this case, not the high, but the high. Okay, that wick. If this candle could have broke this candle's high, I would have entered on this point, but it didn't. This is your entry here. Okay, but I missed that. So by the time it was the London session, we already moved 50 pips for the day. So I missed that completely. And then just to go back to the 1 hour time frame, this was the news event. We had a GDP news event yesterday, so that was the push to the upside on the 1 hour time frame, and that's where we ended. And because of this really steep rally with no real solid static support resistance levels, you have to draw Fibonacci levels. That's pretty much the only tool you have here. Apart from, well, you could probably argue you can draw lines on this little pivot there, and maybe here as well. So on price action itself, you can do that as well. Okay. Now, to get back to the point of why did I take profit where I did take profit in that video, which was over here, is even though we've bounced off this very, this very strong support on the daily, don't lose sight of the fact that you are back in the range. You're back in a range. You're not, this is very different compared to something like this. Okay, this is a clear uptrend. This is not a clear uptrend. This is a range. You're just back in the daily range. And if that's the fact, if that's the case, you need to be more conservative with where you want to take profit, right? You need to keep it a little bit lower because you're in a range. And from this point, anything can happen. Okay, you can obviously either go to the top end of the range, break out, maybe some sort of retest. You'll just use the tools that you have available to identify how to trade it from that point. But right now, we're back right in the middle of the range. Right back to in the middle of the range. So for now, I'm pretty neutral. I would like to see price action unfold and paint a clearer picture. But you can see why this was a bullish trade, right? Because we bounced up there, straight line up. You can expect a pullback and then a push back to the upside. That's the play. With a realistic take profit, because you are in the range. So you just got to just make sure when you look at a chart, you're very clear about are we trending? Are we ranging? What's going on? So this is a little trend and a pullback within a much wider range. Okay, so that is that's the pound US dollar. If you look at the longer time frames, you can just see those candles are just ranging to the side. The daily, apart from the fact that it engulfed that candle and today looks a bit flat, you can clearly see on the daily we're also in this range. So It can either break out, or I'm not counting out anything. This can also reverse. I don't like to get that confident about positions. Oh, this is definitely going to go up. No, you don't know that. You don't know that. Rather wait for price to tell you a very clear picture. So, for example, when we were in the middle of this range here, where was it over here? Some people may have been bullish, some might have been bearish. But what's the best thing to do when you? Let me just draw this vertical line over here. I think it was about here. What's the best thing to do when you're in this range? You have to wait for a key level. Okay, what was the key level? Well, the low of the range. That's the key level. Not here. You're in the middle of chaos, right? You're in the middle of chaos there. So this is not a good time to do. You wait. So in this particular case, I was waiting for it to pull back down. And I mean, I'm not saying it couldn't have gone up. That's not what I'm saying. What I'm saying is it's not a good idea to make a decision right in the middle of a range.
Yeah.
From that point, you got to wait for a key level and then trade off that level. Okay, so that's the pound US dollar. Is there any questions on that, or was that pretty clear?
I don't know if there's any questions in the thing. No, it was an interesting trade actually. I was pondering it because, like you said, it was a hello, no questions.
Hey, Andre, good to see you, man.
Andre, good to see you. That's so funny. Our job is done, apparently. No, because
have a good weekend. Yeah.
When you're looking at the broader, when you zoom out a little bit, we haven't got a lower low. We've revisited that level, that bottom red line, like you say, but it's technically just a higher low. So yeah, there's a bit of a mixed. It could go either way, but obviously, when you're talking about taking your profits, I think given the fact that we were back at that level, it's giving some vibes of a weakening trend. Then that was a sensible decision. But it can still go, because obviously
it could still go. It could still go. But probability-wise, if you think about like what's sensible to do, like given all the information that you have right in front of you. For me personally, it's like I'm not going to go and expect this to go all the way to the high or anything like that. Because the other thing you have to remember is, if I just get rid of these flip levels here, is I can also see this resistance area. Yeah, look at this, like 1, 2, 3, 4, 5, 6. You could can you count that? Let's not count that. Okay. Do you see what I mean? This is a very strong resistance area as well.
Yeah, and so, of course, I mean, it would have been different if we had a candle body close above that level locally, but we haven't. So it's a perfect place to take profit.
Yeah. But again, the only reason why I took the trade was because we came off the low with a very steep kind of, steep climb. Yeah. And we all know it doesn't just move like that. You can look at it, you're going to get a pullback at some point. At some point, it's going to pull back. So if it's going to pull back, you can look at the different levels, what's available to you. Now, I've already pointed out the FIP levels, and then obviously price action itself. That was a beautiful, beautiful support level right on the price action itself. And then that would be the next one if it just crashes through. Okay. So yeah. So when it comes to take profits and so on, again, just make sure you are aware of your surroundings. Like where are you right now in the bigger picture? And if you do find yourself in a range, just kind of go for something smaller, or
And if you're not sure which direction it's going to go, which is a legitimate, indecision at this point with the price action, then you want to be more conservative with your price targets. Of course, but it was either way. I mean, we're waiting for confirmation of the breakout with the candle body close. So, it's all fine. You're following a system, but you have to be. This is the biggest mistake a lot of new traders make. They think about how much money they want to earn, as opposed to what is the appropriate take profit price point for what they're seeing with the price action. And then they don't. I mean, the conversation when I was saying I would have just taken it, there is an argument where you have to follow your plan, but if you see the weather changing, You don't lose by taking profits. You don't lose that. So there's nothing wrong with that. And I'm not suggesting you should change your plan, because it will just so many times I've taken it a little bit below my target and then it's reversed and hit the target, just like you were describing. But it's certainly, when you're in profit, there's nothing wrong with just taking it if there's uncertainty. There's nothing wrong with it.
I agree. The thing with me is, right, if I once I'm in a trade, or I kind of think in my head how I'm going to play it. But once I'm in the trade, I very, very rarely change my mind. Like, even when I see, like, okay, this is probably going to reverse against me, I know, like, for example, where I showed you on this candle here. Okay. Okay. I moved my stop loss over here to lock in some profits. Okay, that is because this is something I've seen many, many times. Okay, so okay, it's ranging inside this candle's range. That's also ranging within this candle's range. Do you understand what I mean?
Yeah.
So then I move my take profit to there and say, okay, I've seen this before many, many times. If it's going to break this candle, I'll take that profit. Of course, I can get more if I go down here, right? I know that, but like, that is just like, it just happens, once I decide to do something and then I stick to it, I don't change it. So if it did reverse and stop me out and I only got a 1 to 1.2 whatever, it doesn't affect me. I don't mind. Like, I've done what I was supposed to do in this particular, for this particular trade. I know my take profit was sensible. Now, when you get like a really push like this on that candle, and you don't have a plan of where's a realistic place to take profit, and also take in account in the broader context, you're in a range. If you don't look at those facts and you see a strong candle like that, you may leave the trade open, because this is a very strong. Obviously, it pulled back in the last few minutes or whatever, but as this candle, was busy forming and it was at the high, that's a big candle.
Yeah.
And the next one.
I think look, I mean, there's nothing wrong with, it's a slightly different proposition in crypto, because, if because Bitcoin is leading the pack, regardless of the setup you're trading, if Bitcoin decides to make a move, you have to make adjustments, but that should be part of your plan. You should have a fully charted Bitcoin trade, and then you should be looking at, well, if Bitcoin does this, my trade is still in play, I'm following my plan. But if Bitcoin does this, it's going to invalidate my plan or put my plan at risk, and therefore I'm going to put a break-even exit point, or I'm going to raise my stop loss up, or whatever. And that's fine, as long as you've planned it, as long as it's written down on your post-it note, and it's all fine. But if you're not taking profits, as an example, because you think it's going to go higher, that's dangerous, right?
Yeah, but now the problem with that is, it always comes back to, and I'm talking about most what people would label as psychological problems, or trading psychology, FOMO and all that stuff. It almost always comes back to, you are focused on the outcome of the trade. You are focused on making money, the outcome of the trade, and not the process. You're not focusing on trading. Exactly. You're focusing on the money that comes with the trading. And that's like, why are you scared of missing out on the trade? Because where does that stem from? It's connected to the money you've missed out on, the outcome of the trade.
It's right? A subtle difference. It's, focusing on the process. And focusing on the process, like you just said, you'll just let it run out. And if it hits your stop, it hits your stop. The process is to have a successful trade. Now, what that means is not necessarily being in profit. A successful trade is being able to interact with the market and remain in control. All right, that's what I would measure as success. And then if you're getting out with no loss, then you're fine, right? You live to fight another day. If you've got stopped out because you followed your plan to the T and that's just what happened, then that's fine. But you've got to forget about the win. You've got to just think about, I am trying to become a better trader. I'm trying to refine my process, and I need to be disciplined, because it doesn't matter if you've got profits. If you're not disciplined, you're going to fail at some point. So it's a good point. It's a good point, Jannie.
Yeah, I think I mean, this, if you think about like, have you heard of traders talking about, they were doing well on a demo account and then they went over to a live account and now they struggle?
Oh, I had a great student this week. He's pretty new, but I have every confidence he's going to be a fantastic trader. And I've got a few students like this, and they're being very sensible and very cautious, and they're just essentially, paper trading, right? This would be my planned entrance, this would be my planned. They're not even doing it on a demo account. They're just using the charts and they're planning it. But I've been forcing them to, like, right, you've got to get on an exchange now. You've got to go and you've got to do it for real. You've got to practice the stress of putting an order on, a limit order, and doing all of that and get used to it. Because there is a difference.
Yeah.
Because I can go back and look at any price chart and say, well, that would have been great. That would have been great. But for me to trade it and to see the price as it is before I've seen what happens, that's a different psychological process, which goes back to discipline again.
Yeah. But I would also argue that even in the case of when you switch over to live account, and you get nervous or your results are different, is you are focused on the outcome. And the other reason is also you're trading too big. The outcome of a trade, I think, especially as a beginner, the outcome, whether it's a winning trade or a losing trade, should make no difference. You should not get excited about the winning trades because it's so small.
Yeah.
You made $120 or $60. It's not, you can't get excited about that. And that's the zone you need to be in. The outcome of the trade is like almost irrelevant. Or if the trade doesn't work in your favor and you lose the trade, you've lost $40, $50. Like, and that is exactly what it's like on a demo account. You don't really get excited or nervous when a trade goes against you because it's not real money.
Yeah.
Right. How can you replicate that on a real account? You just trade. You got to trade small to the point where the outcome of the trade doesn't affect you. And if you can discipline yourself to do that, I'm talking about especially when you begin, until while you're learning the ropes, it's so important because that's going to really help you to focus on the process, because the outcome it just doesn't excite you because you made $40 or $50.
Yeah, I suppose it's like being a gymnast which has never done a competition, right? They're really good, they've got all the skills, and they've been practicing for years, but their first competition, they're probably not going to do well because they've got no experience translating those skills into that emotional environment. So it's and this is why I always say people, just when you're beginning, trade with very small amounts, of course, right? Because you've got to get used to it. But treating $25 the same as 25K is very easy advice to say, but it's difficult to actually enact in practice.
Yeah, exactly right. Oh, it's Andre. Is it possible to return to 1.287? Touch it again to call buy. Touch it again. You mean that I see. Okay, you mean this low? Yes. I mean, honestly, in a range, anything's possible. This can range for much longer than anybody expected and then drop. You see what I mean? Like when you're in a range, it's not wise to try to make predictions. You just kind of have to go with what's setting up or unfolding in front of you. Is anything unfolding here? No, you're in the middle of the range. That was my position on Tuesday as well when we were trading right here. That's not clear. There's nothing there. What can happen here? Can it go up? Yes. Can it go down? Yes. What's the probability for it to go up versus for it to go down? For me, the probability was higher for it to drop. So I had a short-term short bias, not taking a short trade because my overall bias was long, but a short-term bias of this going lower to go to this, at least the support level or one of these support levels that I've identified, and then look at price action from that point. We are back right where we were at that same point where I was like, I don't know what to do here. Okay. And therefore don't do anything, but rather wait for a level. And that's exactly what you should do here. I don't think it's wise to try to predict if it's going to go up or down. You let price just do that hard work for you and just kind of just do what it wants to do. You sit on the sidelines and let it do. It's going to do one or two things. It's either going to go to that resistance or it's going to come to the support. And those are the levels where you need to start to pay attention, not here in the middle. Okay, I'm not sure if that answers your question. Can it go to, okay, so 1.287 and then back to 1.315? Yes. The answer is yes, it can. That's one of the possible scenarios. The other scenario is this can just, as I said, this can range for longer and then just drop to a much deeper support level like the 50 or the 61.8. Okay. And if it does reach those levels, again, you need to focus on price action, because price action will tell you, like I've showed you in the video, it will kind of unfold and you look, okay. And then you get in, you had a key level and you know where to take your risk and all of that stuff. I'm not sure if that answers your question. But yeah, the answer to your question is it possible to, yeah, the answer is yes, it is. It's also possible for this to continue and break that high. But don't try to predict what's going to happen. Yeah, rather wait for the key levels. I'm repeating myself, but repetition is the mother of learning.
Yeah, and Max has asked about slippage, minimal slippage. I think we probably need more information, but depends what you're doing, Max. Obviously, using limit orders would help with that, but I don't know the context. Jannie, you got any thoughts on that?
No, slippage is not something you should have any issues with in highly liquid markets. Slippage is usually a problem for someone who places very big orders, and say you buy with a very big order and there's not enough sellers on the other side, then you can get slippage. So you don't get filled at the price. But highly liquid markets like the forex markets or indices like we trade, that should not be a problem, because not as a retail trader anyway. Institutions have well, yeah, you shouldn't have any, like, I know institutions have that problem because they obviously can't trade in, they don't get into one big position at the same time. You can't get in with $1 billion and get out 15 minutes later, right? It's just not, they get in, typically
I've done that. I got that on me.
Did you get slippage?
No.
Yeah, but look, I know slippage is a problem, especially in low when there's not a lot of liquidity in stocks.
Or a lot of volatility,
right? Like, sorry, not volatility. What do you call it?
With low liquidity, high volatility is not particularly.
Yeah, it's a liquid market. Yeah, it is liquidity, not volatility. Liquidity. Yeah, so if there's not a lot of liquidity, so highly liquid markets, you will not. That's not an issue. Not for retail traders like us. We should not have that issue. Not in the markets we trade anyway. Okay, so that's my take on the pound US dollar. I can understand if people are very bullish because of very strong bullish candle. Let me just remove all these lines. I see what they see. I always try to understand what other people are seeing, and I agree with them. But I agree with everything they see. But I always try to look for the counter argument, almost like a court case kind of thing, right?
Yeah, you have to litigate it for sure.
Yeah, like, what about this? What about that? Now, this is obviously pushing up quite high. This candle's got like one more day to form. Okay, obviously the rest of today and then Monday, then the new candle will start. Now, one thing I just want to point out, that if you look at every single one of these candles, in the vast majority of cases.
Well, give me a minute. I need to look at every single one. Just hang on.
Like in most cases, candles will have wicks, right? A lower wick and a higher wick. Now, I know that's not always the case. Look at that one. There's hardly any wick there. Okay, but this was a reversal of the previous candle. It's not a continuation. This is a continuation, very low wick. Okay, I get that. But do you understand? But if you look at the vast majority of the candles, they've got wicks at the open. This was a very sharp drop. I think this is on the 1st of April. So my point is, I don't think, I also want to draw these fib levels here from that high to the low. Okay. So, okay, we're piercing through. We'll see how we end on Monday. It definitely looks more bullish than bearish, but you can see, yeah, okay, I've just drew the Fibonacci on the monthly, but you can see that we also here on the daily time frame, we are ranging at the 61.8. That's bearish. Okay. Does it mean it can't break out there? No, it doesn't mean that. But we had something very similar in Bitcoin, right? Where we were ranging for some time on the 61.8. This is over here on Bitcoin. We'll go over to Bitcoin in a moment. So that was the 61.8, ranging for some time, and then it eventually dropped. So yes, it is bullish, but I'm again, I would want to see it has to break out. I actually said the same thing yesterday about Bitcoin. I mentioned that we are at a very interesting level here because you can see we are making higher lows and higher highs, but it's actually just a little correction wave in a much broader downtrend. But if it did break the high there, then that would have made for a very interesting situation, okay? Because you get these higher lows and so on. You're ranging to the side. Now you get a breakout. That's very bullish. That's very bullish. But I'm not going to predict anything. But my overall bias over the long term is short. Okay, but the picture can change at any time. Do I take these shorts? No, I don't take those shorts. Okay.
Well, if we're in the process of breaking down, so it's certainly a short trade.
But short term, yeah. But I wouldn't take them because yesterday the picture looked a bit different. We had this monthly time frame was obviously if you add today's drop, it was like a pretty solid bullish. It would have been a bullish close, but as I mentioned last night, we've got today, the weekend, and Monday before this monthly candle closes, and that's going to be crucial. So of how this candle closes, because if you can push up and closes bullish, then I think that sets a bullish tone for next month for at least this upper wick, potentially. Okay, but that would, and then the support level, what I said yesterday would be the open of the monthly time frame. So if you go to the 1 hour time frame, we're bouncing off it right now. Okay, but that one candle won't be enough. So I'm not sure if you agree with the support level, but you can see that we've got right there. It bounces off there. There's a second point, third point. Yeah, it struggles at that level. There's another struggle. Yeah, it just broke through, came right back to this level, and then it broke out from this level. This is clearly a very key level on the 1 hour time frame, and now it looks like we're about to bounce off it again. Will I take this long? No. Why not? Again, you need to look at everything. We just came out of this 61.8 Fibonacci retracement level. So this still needs, for me, unless something sets up that's a bit more clear, but not just one candle won't be enough. But I would like to get out of this downtrend and also outside of the channel. I don't know if that makes sense. The picture will change every day. As I always say, every day 24 new 1 hour candles gets added to the chart. The picture keeps changing. So you just need to adapt to how the picture unfolds in front of you. If this drops even further, then I think as I've mentioned last week Friday, I will not be surprised if this goes much, much lower to potentially what's going on here. Let me just go to the daily. Right, the 61.8 as I've identified. I don't know, but yeah, okay. Was it that one? Sorry, let me go to the monthly. Was it on the monthly? Yeah. right there. Okay. So that's 61.8, but you've got this support level in the way here, which is obviously this high where it broke out from, that level there, 73.841. I know it's a steep drop, but it doesn't look very good at the moment.
Well, no, we're coming. Obviously, I'm not suggesting we are going to hit that level.
No, that's not what I'm suggesting. But it's exactly like on the pound US dollar trade. All I'm doing is I'm just creating scenarios. Yeah. So I'm just creating scenarios. What could potentially happen? Oh, where is that? Yeah. Huh? Okay. Where's that? Okay. I'm just creating scenarios. It can potentially pull back there. Those are just the levels of interest and what can potentially happen. But then you go to smaller timeframes and look at what's actually busy happening, and then you just stack probabilities and wait for key levels and then see how they behave at those levels. Okay, so that is. I mean, we obviously had the NASDAQ as well. Unfortunately, I didn't have time for that today, but there was a very strong break, which I didn't even look at it today. But just to focus quickly on the longer time frames here, the daily, we just peaked above the 200 EMA, and then yesterday, or actually on Wednesday, we had a very strong day down, a bit of a doji day yesterday, and today the continuation. I still have my short level here, that support level here that I marked 2 weeks ago. I still believe it will come down there. Okay, so that it was just testing the 200. I was actually expecting a bit of a fight, yeah. A bit of a range. It's not ranging; it's just dropping straight back down. So yeah, I do believe this is going to go down to this level at least. This is the June contract, so 18,343, at least to that level. And it'll be interesting to see how price behaves at that level. If it's going to find support or just broke the lower to even lower levels, which will be over here. And that's it for now. Sorry, Paul, I took up a lot of time, so let me hand over to you.
Great, thanks for that. It's all right, we're all like a chill Friday.
The DXY. Oh, sorry, Andre. I'll get back to that question in a moment. Maybe
let's
Paul can also. Yeah.
Let's answer that. Let's do that. What do you expect from the dollar, which is now below 104? I mean, do you want to take that, Jannie? That question?
Yeah, I'll. Let me just.
Do you want to leave Andre waiting?
No. Yeah,
Andre, you can't start and say hello, no questions, and then start giving us questions. We're very grateful.
They've got. Yeah. Okay, let's have a look. Yeah, I think yesterday when we spoke, it was a bit rangy. Let's just have a quick look here. Oh, I need to. Okay. All right. So this is the 4-hour chart. I think on the weekly, this is where I always start. Okay. That my engulfing candle that I was so optimistic about is now reversing. But I wouldn't invalidate that until it breaks that low. So definitely looking bearish, but that's not, for me, that's not enough to say it's definitely going to reverse. Definitely not. On the daily, okay, there we get you see, that definitely looks bearish, doesn't it? And on the 4-hour,
yeah, I mean, it's not being able to even muster a retest of that diagonal line either. So it is.
Yeah, I was expecting this to go to the 105 level. Well, maybe that line, 105.
Yeah, Andre, when you're looking at stuff like this, just try and look for signs of strength or weakness, and that will give you an idea of kind of where it's going. Yeah,
the 4 hours a bit more clear in terms of multiple points that it touched. You can see that level, that's a resistance.
It looks like it's in the process of invalidating right now, though.
Yeah. Resistance breaking through, retest comes back down. We are back at this resistance level. So it's a tricky one right now. Okay. Right now, I think for me, it's a bit difficult to read personally. For me, we add a support level.
We need to wait and see what that candle's doing, really.
Yeah, you need to wait how the price action behaves. Yeah, hopefully we can get like a, the next candle will push up, but it's Friday, so I think we're gonna get like a clearer picture on Monday.
Yeah, but if we get a close, you have to presume it's gonna start ranging in that lower range again. So you need to keep on that candle.
Look, I mean, overall, it's definitely more bearish. It's definitely more bearish on the overall, but I think in the short term, I would not count out a rebound. This is not that straightforward at the moment, to be honest, because we are right at this key level. Like literally, I know the candles look very good. That was a steep drop, and the new one is where it is at the moment, but it's still at that support level, and it is support. It's not resistance because we're above it. We already broke that resistance. So this could very easily go back up and be in this range, very similar to the pound US dollar. So maybe not that helpful, not a clear-cut answer, Andre.
Yeah, just wait for confirmation. If it closes in this range, presume it's coming down. That's it. And just, that's all we've got. Just go by your signals. If you get that candle body close, presume it's coming lower until it breaks back up. Simple as that. Simple.
Yeah, I agree. Okay, so
right, yeah. So Andre, I can answer that question for you. Just for those paying attention, we obviously Holoprime has a new crypto-focused YouTube channel, Holoprime Cryptos. We also have a new website for crypto trading as well. So be sure to subscribe to that. We have top altcoin picks every week, which is essentially cryptos you can potentially trade if it's within your risk tolerance. And we have twice a week, we have Bitcoin coverage outside of the live streams, as well as crypto news and other various things. So lots of stuff coming. So Andre, if you're looking for setups, obviously subscribe to that channel, like, comment, all of that stuff. But let's have a look at what I can give you today. So let's have a look. I have one setup today. We'll have a quick look before we jump into Bitcoin, maybe. So this is MKR. Now, just remember that everything is dependent on Bitcoin, and we need to just this move here is obviously been following Bitcoin's macro uptrend, as Jannie was just talking about, and what happens next will essentially determine where we go from here. So we'll check in with Bitcoin in a sec, but if Bitcoin breaks out, as Jannie was just discussing, then we may see a breakout of this symmetrical triangle, and then there's a long trade for you there. And obviously there's a couple of options if that happens. You can wait. Ideally, you want to see quite a strong breakout, maybe up to here to surpass this high, and then you could be looking to come down, maybe for a bit of confluence along this horizontal trend line, which kind of lines up with the retest of the nose of this triangle, and that might be a good entrance. You want to be around here, as close to here as you can, because you don't want to be too close to resistance. But that would be ideal for a long trade. And obviously, you would then have, this is the daily chart. If you did get a breakout and it came up here, and you really want it to maybe go into the upper range first, just so we can surpass that high, just for trend confirmation. But then if that happens and it comes back down, you've got lovely confluence with the 200 MA and this horizontal line. And as well, let's not make that red. That's very scary. I got scared. And then it hits so you've got 1 support, 2 support, and then the 200 MA is 3 support. So that would be the long breakout trade for that. But obviously, trade it any way you see fit. If we have a breakout right now, then we're a bit close to resistance. It'll be interesting to see what happens. But obviously, these triangles are really great because they offer great lines in the sand in terms of being able to trade. So if Bitcoin does confirm a breakdown of that pattern and maybe just heads lower just over the weekend, then your short trade would be maybe this. So you wait for a breakdown, surpassing this low, putting in a lower low, breaking the trend, and then you'd be looking for a nice bearish retest again with confluence of this diagonal trend line, this horizontal line. And if we do move down, the 200 MA will probably sweep down a little bit as well. So really straightforward, clean chart. Don't need any more information at this point. It's just, you know, we get a breakout this way, check your volume, it wants to be strong, and then you could enter on the retest or whatever the way you approach these things, and then the same in reverse. And we are really bang in the range. This triangle is bang in the middle of the range. So if you get a breakout, it's kind of, you know, there's 60% of that range where we were at the haven't been there since November, so just bear that in mind. Talking about price targets, and 63 down. So, but talking about price targets, I would be more conservative with your long price targets for this particular trade if it works out, and not reach for the moon necessarily. If we do get a bearish move from Bitcoin, then these targets are more in play, because we are, of course, in a downtrend, and that means the short trade may play out a lot deeper than any long trade. Any thoughts about that setup, Jannie? Your insight?
Yeah, I mean, I first of all, I can't really see your chart that well. I don't know if you can zoom in a little bit. Actually, I can do that. Yeah, for me, I mean, I would not go. It's very similar to the pound US dollar for me. I would probably want that to go a little bit lower. Is that what EMA is that? Is that the 200 EMA?
200 on the daily. Yeah.
Yeah.
Pretty rock solid.
Yeah, and the triangle you've identified, or that you've got on your chart, is pretty accurate. You see, you've got higher lows, but you also got lower highs. So you are getting to that critical point there. So you can get a breakout in either direction.
You don't want that.
Direction. No. That's going to be no, because that's going to be. It needs to break the previous low. Sorry, the previous high.
Yeah, so that's why we said it needs to do that.
Yes, it needs to break the previous high, but right where you are now, as you said, you like bang in the middle of the range. So that's just a pure guessing game. It's very difficult to stack probabilities in either direction from this point.
Well, it's got a bearish bias because we're in a
It's got a bearish bias. Yeah.
Yeah. I can see if the trend continues, the next low is probably here.
What? Oh, let me just. What level is that? Is that based on a previous support, or was it just a round number, or what?
Previous support.
Oh, there we go. Okay. Yeah. Sorry, I couldn't see that. Yeah, exactly. Yeah, the previous support, that makes perfect sense. That's a good level to get out. Potentially look at how price action behaves at that level. Maybe something sets up for the opposite end, to go long. But yeah, the take profit definitely makes sense. But right now, as you said, you want to see a break of that latest low or the latest high.
Yeah.
But right now,
I mean, it's when you're trading these things, obviously there's multiple ways to trade it, but say you've got a bearish bias, right? I might be inclined, if we get a breakdown, there's three ways to buy the breakout or breakdown, whatever. So the first way would be to wait for a candle body close, and then the second, maybe on the 30-minute, maybe on the 1 hour, and then when you get the candle body close, you just try and enter as close to this as you can and just try and ride that move down, right? So that's one strategy. Now that tends to work quite well in bullish context, but obviously we've got a bearish bias here, so that might be an option to just capture this downwards. But I wouldn't do that on the opposite. I would definitely wait for a retest on the opposite, because this would be the first bullish signal we've had, putting it a higher high, and it's very likely we're going to come back down and give you solid entrance. But here, you could be a little bit more less cautious with the break lower, because obviously we're in a downtrend. But yeah, just see what do you want to see for a bullish context. We need to see a change in the trend and a breakout, those two things. So if you see this, no bueno. But if you see this, then that's something we can work with. And other than that, any breakdown here, just you could short it, because we're in a downtrend and we're just going with the river essentially, and then that makes sense. But if it does break out and Bitcoin is still a bit rangy and it's not giving as many signals, and this is probably your target, not that, right? Because we've got a bearish bias. There's one potential setup. But let's have a look at what some of let's have a look Bitcoin's doing, and then we can go on from there. So yeah, same deal we've been looking at. This is a slightly different chart than we were looking at yesterday. There's a few different ways to draw these diagonal lines. You could argue that that's happening as well, and that was just a fake out. So there's if I just This was the line which was on yesterday in our live stream. So there's two contexts here. You look at it like this, and we broke out of this diagonal trend line, and now we've come back in. Or you can look at it like we've never broken out of this pattern, and we're still in it. So still very bearish. And of course, we lost the 1-day 200 MA now, and there's a battle to see what happens next. But there are buyers coming in by the looks of it, just below. So we need to see how it reacts to that. But if we don't get a quick recovery, if we don't get a nice bounce like this now, then we're probably, you've got to presume we're going to come down, because we've lost the 200 MA, and that's serious support for the 1-day chart. So we need to see what happens. But if we're coming down here, I mean, bulls are going to be trapped, right? Where are we going to go? What we're going to do, right? There's just so much overhead. So we want to get back in here for any chance of a breakout to try and attack this area. But right now, I think the weekend we could just get stuck in this range and maybe break a little bit lower. But then if we come down here, this could maybe help us form a reversal pattern of sorts. And if we see something like that, there's a double bottom, there's a higher low, and there's a more bullish context. And you can see all the buyers are kind of thinking the same thing, that if we do come down, that's where they want to be. So this is what, if it does break lower, you know, these are the areas you want to come into, maybe around here. You can see they're not too bearish at this level. So, but yeah, it'd be interesting to see what happens. But you have to, what does Bitcoin need in order to get up here? Right now, we're closer to the sellers than we are the buyers, which is why the price action is struggling. Because you've got to ask yourself, how many buyers are going to show up here, right? We've broken off the 200 MA, great, but we've got a lot of resistance overhead. We've got that 618 overhead. Where do the buyers want to be in order to find their footing? It's down here, right? It's down here. And when this is where the buyers start taking over, and then we can attack these sellers properly by getting a bit of a run up. Right now, unless we get some crazy bullish news, then, you know, like, I don't know, everyone in the United States is going to get a Bitcoin each. I don't know, whatever, right? Who knows? Then, you know,
Oprah Winfrey style, you get a Bitcoin, you get a Bitcoin.
You never know, right? With characters we've got in the world at the moment, right? But yeah, so that's the move we want, you know, in the short term, but I'm not sure it's going to happen. There's just too much selling activity. Where are the buyers? The buyers are down here. The sellers are up here. We just need to maybe just get this trend to break and form a higher low on the intermediate time frame. So if you just switch that to the daily, it'll look a bit janky for sure. But you know what we want to see is a reversal pattern, and we haven't got that. So this could be the neckline of a potential double bottom if we come down here, base, and then away, and then maybe the buyers will come in. But that's kind of where we are. Interesting. We've got a candle body close on this 2-hour chart in a couple of hours as well. So let's see what happens if we get a bounce here. But that's Bitcoin. And obviously, if you're thinking of these trades, you're thinking of this, then what do you want to see from Bitcoin? If you're shorting it, what do you need to see? Well, you want Bitcoin to come down, right? I mean, it's that straightforward. You want it to come down here, right? And there's your bearish context for the trade. So if you're looking for that MKV short trade, you want Bitcoin to close below here and then start losing this level, and that's the bullish context. If you're looking for the opposite, well, Bitcoin's got a lot more work to do. But let's see what the money flow is doing. So when Bitcoin dominance is approaching resistance, that's essentially support for altcoins. So if you see here, when the price action, the indices has come up, and say you were looking to enter a long trade in altcoins, this would be the place to enter, arguably, because then it comes down and this will propel, this is money flowing into the altcoin market, this will propel your trade upwards, whatever it is you're in. Right now, we're in a macro uptrend again. Well, no, we're not in just a macro uptrend, but we're in a proper uptrend. And obviously, we're approaching this area. So for any long positions in altcoins, this is the area you want to think about entering. But the problem is, with Bitcoin going down and Bitcoin dominance going up, that's the worst possible combination for long trades. So I think I'm agreeing that we're a bit bearish this weekend for sure. And I wouldn't maybe enter any long altcoin positions until we get a break from this ascending triangle, which, remember, you know, has more probabilities to break out to this way. So mixed at the moment, but you can use this to your advantage. So let me just bring up ENA. So ENA was a top altcoin pick this week.
It's a coin. I thought you're going to introduce us to someone.
It's funny. My auntie was called Ina, and she's very
right.
dependable. And I've traded this token quite a few times, and this token has been quite dependable as well. So we like that kind of personal confidence. So, so when I posted this top altcoin pick, Ina, the price action was up here. Okay. And there was if we obviously had a breakout, that's what we're looking for. But the ideal entrance is this support zone here. And we said that we need Bitcoin to come down and we need Bitcoin dominance to go up to force the price action to where we want it to enter this trade. So we might be, crying over Bitcoin at the moment or Bitcoin dominance. But if you think about it, for the ENA trade, having Bitcoin dominance up here and have Bitcoin itself come down a little bit will put ENA exactly where we want it to be. And then if we do get a bit of a reversal from Bitcoin or Bitcoin dominance, then that can then propel us at the bottom of the range to the top. And that's the trade. But the other top altcoin pick, which I said wasn't my preference because of this, because at the time we posted at the start of the week, we had broken out to this upper range following this lower range. And it was essentially by the retest of this area. But because we didn't have confluence with this moving average, it's created a lot of confusion in this area. So any breakdown, right, we're losing the bullish context. And you can see Bitcoin's, just flashed a little bit of a bearish signal and all the buyers disappear. So this is why I said WLD wasn't the best possible trade, because where are we going here? We're running into sellers, so there's nowhere to go now, and we're going to lose. We're losing the 200 MA. So that's why I didn't suggest that one as the top one. And Move, which is a trade I am looking to get into right now, is again the ideal kind of breakout trade you want to look for, because what we're talking about with MKV, looking for that breakout to the upper range to give us bullish context, to give us a higher high. Move has really put in a move, and it's come up to here to the second range, meaning that this downtrend is over, right? At least based on
definitely.
this range of character. So this retest, again, with confluence, with the moving average and everything, this is great. It's really good. And I'm looking to enter around here, right on this line, right here at that 4652. I have an order on the exchange, and we're going to see what happens. But obviously, if we come down into the pattern, then I will look to exit my trade at no loss. And that's the play, essentially. So I'm hoping, I'm not in yet because I've waited to see where the bounce is. So I want it to come down here, right? And then just bounce again. And then I'll hopefully be looking for that. But obviously, we need Bitcoin to give us something. But if it does, you'll see what the move might be from this if we do, because it's really looking to move now. So yeah, that's my trade that I'm in at the moment. I'm not in at the moment, but I'm about to enter if we get it where we want to be. It's a controllable position, and then I will be looking maybe to ride it up to maybe about here. And if the trade plays out, that would be it's a 30%er. Here's the point I'm trying to make. So if the price action had broken out and it only just came up here, I would not be so inclined to enter, because we're technically below resistance a little bit, even though the range is a bit ambiguous. But because of this strong move, because of this volume, look, we've had this volume is the highest volume we've had since, well, it's the highest volume we've had ever, right? I can see until it was launched. So that's really bullish signal. And that's why I've entered this trade. And ENA, of course, isn't quite ready yet, but I might enter this one with another position if we enter at support, because it's manageable. Because if we break down here, the price action will likely just do this, and you'll have a few bulls trying to come in and push it back up, and then I'll be able to get out. So there's a few potential trades. I mean, any thoughts on any of these, Jannie, from your perspective?
Well, the chart you just showed there, Move. Yeah, I agree with that. I agree with that setup. But what's your expectation? Are you going to target the previous high, or are you going to have a more conservative profit-taking level? Or how do you go about determining where to take profit when you see an opportunity like that?
Yeah, let's crack it down, because I haven't entered yet, so I haven't given it 100% thought yet. But so if we look at these two, these are the most two logical levels, right? We've already been there. This is more modest, and this is the next proper trend line. So it's about Bitcoin. So if Bitcoin does recover now, that might be just come back up here. If Bitcoin just comes back up here, this will be enough to propel this back into this range, and a few other buyers might join me. But if it's still in that range, if it's still stuck here, well, I'm taking profits here if I can, right? I'm taking profits here. But if on its way up, I see Bitcoin break above the 618, then I'm holding it. Then I'll raise it up to here, right? And this is how as traders you should all be constructing your trades. You have a and if or scenario, and that includes take profits and all of that kind of stuff. Because I mean, this was a great move, but I need to see more before we're going to have anything else, because this could just come back into the pattern. But that's how I would construct it. Really straightforward. Just see what Bitcoin's doing, and that will determine it really.
So Bitcoin has to go higher. That's what you're saying, right? It has to go higher.
Yeah. It needs to. Well, this is not in a bad position for a long, because we're at resistance. It's looking weak, and if we come down here, that will propel the trade. But Bitcoin just needs to get back up here, ready for a bit of bullish context. Because I think if you look at Ethereum, Ethereum's a good barometer for the market. This is Ethereum, right? And as we said the other day, with recent Bitcoin action has allowed this to recover and just about get back into this range. But as we said yesterday, that any move downwards from Bitcoin would push this back into no man's land. And again, we're looking at the RSI. I was hoping we'd have a nice retest on the RSI to maybe give us a bit of positive thought about a bounce here. But this is what we need to worry about. And obviously Ethereum needs to come up here. But this is representative of the general sentiment in the market at the moment. And for moves to continue on its journey, we need more context. But it's a solid entrance. I'm happy to enter here and wait and see what happens. It's a really nice level. It's kind of at the point of invalidation as well, which is always where you want to position your entrances, as that's usually where the reversals happen. But yeah, that's what I would have done.
I've never heard of Move. I'll be honest with you. I didn't even, or Ina, or the rest of the family. Move sounds like the cow in the background, and Ina is the owner, and it's just some weird names in the crypto world these days. I've never heard of them. What's the market? What's the market cap on that, right?
We've got Bohm, Cookie, Dogs.
Okay.
Eden, Floki.
Don't you feel like those are some dodgy names? Don't you think? Cookie, really?
These are all holoprime cryptos we offer. Let's not.
But don't you think they what's your opinion or your take on
Pengu?
Don't you think they're risky? Or what's names? No, not the.
I'm not trading anything.
But those coins, they don't have the same market cap as, say, Bitcoin, for example. I don't know what the market cap is on something like Move. But
firstly, all the cryptos we offer at Holoprime Cryptos are USD pairs. So in the market, when you have USD pairs, there's a lot of regulatory approval which needs to go into that. So even some of the top cryptos like Render don't have a USD pair. They just have a Tether pair, USDT. So they've reached a certain point in their development where they've got at least enough credibility to get that fiat currency pairing on exchanges. But I wouldn't, to answer your question, if we talked about this yesterday with low caps, you have to treat, this is how I trade. I look at Bitcoin, I plan Bitcoin charts, I figure out what Bitcoin is going to do, and then I look at altcoins. So if Bitcoin is then, I predict it's going to, or I see that the signals are going to give, Bitcoin's going to give me 5%, right? I'm not trading Bitcoin, but I will then trade that move on a mid cap, perhaps, which will then put in 15% or 20% based off that 5% move from Bitcoin. Or I will then go to a low cap. The context for the low caps are not in play at the moment, because for the low caps to move, we've got Bitcoin's got to get back up here, right? Because it's trickled down essentially. So the high caps will start to move when Bitcoin puts in bullish moves and consistent bullish moves, then the high caps will move. And then the profits from those high cap movements will then go down to the mid caps, providing Bitcoin is still going up. And then eventually the low caps and the uber low caps will start to move, but they're the last to move. So if you've got like a really good setup on a low cap, like even something crazy low, like 50 million or something, right? you need to realize that you can't trade that long right now, because Bitcoin just isn't going to allow the money flow to the waterfall of money to run long enough for it to reach the low caps. Whereas if Bitcoin comes up here and starts attacking all-time highs, then everyone will see that bullish context, and then the money will start to flow and trickle down. And if Bitcoin is consistent, then the money will reach the low caps, and then a 5% move from Bitcoin could equal 100% move from an ultra low cap. But you'd obviously use less capital, right? Because you need more capital with high caps to make gains, and you need less capital to make the same gains with the lower caps, because they move more, but there's higher risk. So does that make sense? Does that make sense?
Yeah, that makes sense. I think Bitcoin's going to come down to scare the kids, and then it's going to go up.
Oh, it always does that.
Exactly. So that's what I think. Yeah, exactly. It looks like it's completely failing.
I think
apart from like around October, I'm just looking at the daily. October, there was some really nice moves. I think that breakout from I believe you said you catch this move that was on November last year.
Yeah,
that breakout, and then it just continued. That was a massive move.
Yeah, and it's like what we're talking about. Just bring this up, right? This is obviously the big picture, and the level where a standard retest following a breakout of this level, which is representative of an area which makes up of the previous all-time highs around 69 to 73k. Coming back down to this level is perfectly healthy. So when you're looking at this chart, coming down to this area looks really scary, but in the context of what is natural price action for Bitcoin, this is still a bullish context for sure, right? You can see there's a primary line here, which we're respecting as well. So as long as we hold this line, whatever happens over the next few weeks, we're still bullish until this line breaks. And hopefully we'll start seeing buyers coming in to front run it. But the question isn't really about Bitcoin. It's about the rest of the market. And unlike previous cycles, Bitcoin has put in. Let me try and see if I can do this while you're here, Jannie, because yesterday I found this Bitcoin dominance chart first time, and you weren't there to witness it. So,
oh man!
I've done it again. There it is. I got it. I nailed it. Right. I've been practicing.
That's good. I was gonna I meditated and said, "Do not do that. Pull again." I'm just joking.
So, okay. Unlike previous cycles, Bitcoin has made its moves, but the altcoin market hasn't. Now, according to previous cycles, around here, 240 odd days after the halving, we were expecting this sort of move out of Bitcoin dominance, which is money flowing into the altcoin market, turning thousands of % profits for mid to low caps, right? Now, that started to happen after the election, but then trade wars, economic issues, all of it just got out of control. And now we're back up here. Because you can see we came down, bearish retest, and then we just wanted to continue downwards. But then all the altcoins have reset because of the trade wars and all the issues around the world and all that kind of stuff, right? So as long as Bitcoin is bullish, what we're waiting for altcoins, ignoring any TA on those charts, is we are waiting for this to simply enter a basic downtrend, right? And when it does, this is money flowing into the altcoin market. This was Binance Coin at $12. This is Binance Coin at $200 to $300, right? This is the move, and we haven't had it happen yet, but we need it to happen soon. So this is the chart to watch if you think especially with low caps, right? If you found a low cap and you really like it and it's at long-term support, don't enter yet, right? Don't enter yet, because this is what you need to watch. When this starts moving downwards, then you can start to enter your higher risk asset purchases. But right now, we're just, all the altcoin market is doing is just a little bit of love. It's just doing this, a little bit of love, and every now and again, a little bit of love, and then it's just resetting. A little bit of love, then it's just resetting. And we could still come up here. So, that's the kind of game at the moment. This is all eyes on Bitcoin dominance, really. It runs the whole market. And you can see this uni trade, which we were thinking about yesterday. It's just, sitting here pretty. It's going to come down if Bitcoin did, and therefore you can see it's doing the same thing. Yeah, and you can see Sol as well. We've broken out, but it's just rolling over. And this is the context. So we need Bitcoin to come alive, get up here, and then we hopefully will then see Ethereum recover and come up here, and then other people will see that, and then they'll start purchasing Ethereum, the top 10 altcoins, and then maybe the cascade, the domino effect of money slowly flowing as people take profits, and that will work. But we haven't seen it yet. So
yeah,
not yet.
I think you have a question. Andre was hesitating whether to ask you another question or not, but turns out he's made up his mind and he decided to ask you another question. So, I don't know if you can. Oh no, it's not a question. It's actually a statement.
I'm going.
Can you read that?
Trump took off. Yeah. So, whenever I see the word beginning with T, I'm always a bit hesitant about answering. Paul, just it's like it's the same as Gaza. I'm like, no.
Yeah, not going there. Yeah.
Fall after Trump took office, the dismantling of Trump trade began, and the DOX began to fall, and cryptos too. Yeah. This is because obviously a dollar that for risk assets, for the altcoin market to take off, we need the dollar to be cool, right? But we don't want it to be dropping like a stone. We want it to be gliding downwards, providing, consistently improving conditions for risk assets for people to then do that. The dollar at the moment, its position is reactionary to unprecedented actions in the world. And as a result of that, the conditions which we're looking for, even on the price chart, aren't doing the things we expect it to do for the altcoin market. But we do need the dollar. And it's arguably that the reason why the altcoin market has been start, stop for the first time in its kind of history of this bull cycle is because the dollar has been ranging for an extended period of time, very hot, very high up because of all of that stuff which has been going on. So all the stuff going on around the world at the moment with various administrations is the issue, because you can have everything on paper where you want it to be, but if it's all about context, because we talked about like the first time you get the first positive inflation news like a year ago, that will move the market. But we know now with the inflation data, as Igor was saying yesterday, we know with the inflation data now that we haven't got the proper figures for what it is at the moment, because these are from 2 months ago. So the CPI data we need to see is a couple of months down the road, and we know higher prices are coming because of the trade war and the tariffs. So we've got we've got the Fed saying, well, maybe it's going to be okay, but we know it's not going to be okay until we stop having, I don't know, crazy news bonanza every other week, because that's what markets need and that's what risk assets need. Bitcoin is a de-inflationary asset. It's completely different and separate to the rest of the altcoin market. So Bitcoin can carry on to 300K, fine, but we want the rest of the altcoin market to follow it, because that's where the money's made, right? Because if Bitcoin's going to do so Bitcoin does 150% profits this cycle based on where it is now, that could be 5,000, 6,000% profits for a mid to low cap. And that's what we're trying to capitalize on. But until we get better conditions around the world, then that's essentially where we are. I mean,
and better conditions. And by the way, we don't know what that would look like, because everybody's at, like you said, like every week looks different. Something new news event, or Andre, as you've mentioned, Trump announced something he's going to sign on Tuesday. What's that again? You can probably something about car tariffs or something along those lines.
Oh God, yeah.
And there's always that surprise news that has a massive impact on the market, and the numbers, CPI, all of it. So, I mean, I think it has been difficult, I think, this year to trade.
And if you want to put a bit of context, there's many things we're looking for, right? It's like today, the SEC formally announced the dismissal of civil enforcement action against Kraken and various other exchanges as part of its effort to reform and its approach to crypto. And then just following that, Senator Bernie Moreno said that former SEC Chair Gary Gensler was one of the stupidest people in government, right? And he's been overseeing essentially crypto regulation for the last good few years. So that's obviously, I'm not trying to suggest that we want the Cowboys to take over the inn, but we do want common sense legislation and regulation. But the problem is, like, there's a lot of news this week. If you check out the crypto news I did a couple of days ago on the new Ola Prime Cryptos channel, talking about the stable coins and kind of the stable coin revolution at the moment, where everyone's trying to get their stable coin. Europe's trying to move away from Tether and USD and compete there to kind of essentially not rely on the dollar. The US is trying to combat the attempts by Russia, Iran, China, North Korea, and Venezuela from their actions to try and become less dependent on the dollar. And the United States is responding by all this stablecoin news by trying to create a government-sponsored stablecoin from the White House, which they can then use to spread the dollar through digital means. And I mean, that's quite interesting news, but it seems like there's going to be a bit of a tether war, a stablecoin war of sorts. And I don't know yet if that's going to be good for crypto. I mean, it's good that no one's getting sued, but there are plenty of people which deserve to be sued in the crypto space. So we don't want to just let go of the reins, right? We just want to have common sense legislation with people running the government who understand the space. And if you look at the Senate in the United States, I'm pretty sure none of those people know what a mobile phone is, let alone how to use it, let alone how to operate on a blockchain, right?
Yeah.
So
yeah, that's true. But one thing, this uncertainty in the markets, there is one market that really benefited from all of this uncertainty, and that's gold. Gold just went to the moon. I don't know when last you had a look at a gold chart. Yeah, but it's not stopping. It's not stopping. And that's typically the case. Usually that was the case with when the dollar weakens, people buy gold. But I think people are buying gold for more than just that. There's a lot more reasons to go to, they see gold as the safety or the safe place to put their money at, physical asset. So I'll show you the chart.
I think Bitcoin is certainly filling that void as well. I think digital gold, real gold, but those are the only two. There's no crypto which is going to compete with gold other than Bitcoin.
Yeah, just have a look. So that's the interesting thing. It's like, why are people not going to Bitcoin? Do you think it's because of the fact that Bitcoin, many people believe Bitcoin only works because people believe in it. It's not a physical asset, right? It's not a physical asset, but gold is a physical asset. So that could be the main reason. I don't know. I'm just speculating.
Well, the thing is with Bitcoin, firstly, people are buying Bitcoin, and inflows are increasing significantly. We've talked about this earlier in the week. And it's all a basic supply and demand thing. Now, obviously, when any asset has natural price movement, and when we're looking at Bitcoin's movement at the moment, we're looking at the primary trend across the daily, the weekly charts, moving in slow motion. We've broken out, we put in new all-time highs, and now we're just in the process of retesting. Do we get, as we talked about earlier with your trades, do we get the perfect touch of around 73K, or do people front run it, and do we take off from 74, 75, whatever, right? So I think people are buying it, but it's just waiting for the conditions. I mean, and Bitcoin is a machine. It adjusts itself. The hash rate changes. The reward changes every 4 years. It is a de-inflationary asset, and whatever happens in the market, as long as it's not a hack, it will be going towards 1 million, and it will not stop, right, until something happens to it. But that's just Bitcoin, and there's always a good place to buy in the year, and there's always a bad place to buy. And we're definitely in the bad place bad place of uncertainty. So we need to come down a little bit, maybe have better conditions in the world. Tariffs are all over, and then people will enter, and Bitcoin will come up. But let's see what gold's doing.
This is the Bitcoin chart. Oh, the Bitcoin chart, the gold chart. And this is basically since since the new administration came into power, so this is Jan, Feb, March, gold has just been going up, and I think that's again because of the uncertainty around everything. The market itself, if you look at the NASDAQ, it's been tanking. And we already had this conversation about, some of the bigger players like Warren Buffett is in cash. He got out, I think 2 or 3 quarters ago already. And he mentioned that the tariffs will be a problem. Will definitely be a problem. So he's bearish. Like as I said, I think we had a conversation about like he went into cash. He had to pay tax on that, and is exposing his wealth to inflation. And he still believes that's a better move compared to be in the markets right now. So I mean that tells you everything you need to know. He's definitely he definitely has a negative outlook. He's not a scalper. He's a long-term investor. So obviously in the short term you can get price going back to the 200 and all of that stuff, but I think it's not looking very good for the US economy. Or the dollar
is just saying, like, with the tariffs executed on the 2nd, the feeling of stagnation in the US may come, and the market may look for other markets such as Europe. There is a repositioning in the world right now. Everyone, Europe, my country, South America, everything is changing. Everything from immigration policies to monetary policies. Now, and all of that rebalancing takes time, not months, not weeks, years. And the problem is with cryptos is, sure, we might, all of this, all this mess, there is bullish news, there's good things, but you can't, that means nothing. I mean, we're talking about a setup I was looking at the other day, Uni, and it got some really bullish news and it just didn't move. It just didn't move. And like 2 years ago, that would have put in some great gains overnight, right? Because of the news, and it's just not moving. So we just need, it's going to be interesting what happens. My greatest fear is that the altcoin cycle bull run will just not happen this cycle. Bitcoin will do its thing. If there's a lot of pressure, we'll hit 6 figures. We maybe won't hit 3K, 300K like we would have done, like the pandemic. We should have really hit six figures, but because of the pandemic and economic issues, it was a bit muted. So we could see a massive change in the cycles of the crypto market and a fundamental shift. But we know what to look for. We talked about Bitcoin dominance. That's just what we're waiting for. If it continues higher, then it continues higher. But when it enters a downtrend, that's what we want. But it's not going to enter a downtrend until we have better conditions. And if it takes 2 years to everyone to calm down, or for the world to be over and for us all to reset and come out of our caves, then that's what we have to do, right? But
yeah, but I agree with you with the news events. Like core CPI is a very significant news event, and the latest one was so weak. I was surprised at how weak the response was to that news event, and even FOMC. This was the FOMC candle. Usually with FOMC, you see a much bigger reaction.
Yeah.
You just didn't see it. There was just so the news events, like you said, they don't have the same impact, and it's clearly because there are bigger things at play, right? The uncertainty lies at not in the numbers of the economic data. It's much bigger than that. The uncertainty is just much bigger than that, and the surprise element. There's constantly the surprise element. Surprise! We're gonna do this now, So I think everybody's a bit cautious.
Yeah, understatement.
But again, that to me explains the rally in gold.
Yeah.
Nice solid asset there. But
keep that under your bed for sure.
But yeah. God's money. They call it God's money.
Well, what am I supposed to do? Because I'm an atheist. So who am I betraying?
Yeah, so it's going to be, but how I mean, it's so difficult. Like if somebody had to ask the question, how high do you think gold will go? And this is the perfect chart to look at. Like, it's impossible to answer that question.
Well, you can look at previous turmoil in the world. You can look back to the turn of the 20th century. You can see how it's doing. But I don't think there's a chart for that.
I was going to say, pretty sure they made up their own charts.
Can
They
you
were writing
scroll
down
back to
numbers,
1912, please?
they were writing down numbers and drawing their own little graphs.
TradingView version 1.
Yeah, exactly. All right. Well, Paul, it's always great to see you. Always great to talk to you. It's always it's nice to get your insights on everything. Andre and the others watching, thanks for joining. It's always great to get you involved with what we're talking about. Have a great weekend, and yeah, we'll see you guys next week.
Yeah, have a great one. Thanks, Jannie. See you later.
All right. Cheers.
Hello, Michael. How are you doing?
Hey, what's up, Sam? I'm great. How are you?
Yeah, not too bad, not too bad. How's your day been?
Slow for me, man. Slow. It is pretty much the last Friday of the month. I always take it pretty light, just in case. I would hate to ruin my great month with an impulsive decision at the very end. That would suck.
Yeah, no, absolutely. I feel that.
Yeah.
S&P's been crazy today.
I
Absolutely
see
crazy.
that. I thought about you when I seen this drop.
Oh man, I missed the entry. It was such a and it just hasn't been a chance to get in. It's just been drop in. It's never come back to retrace to any area. And I don't think it will.
Yeah.
Well, it might do now, but then there won't be a trade, will there? So,
Nah,
but yeah, crazy day, man.
can't chase it. Can't chase it. We already know how that ends up.
Exactly. Absolutely insane. I mean, I can pull up the charts and show the viewers what we're talking about.
Yeah,
All right,
let's
let me
check
do
it
that
out.
real quick. Present. Here we go.
Yeah, I seen it. When I saw those huge drops, I sure thought about you. I'm like, that was either a stand to the side, you were in it before it happened, or just no opportunity to get in.
Exactly. All right, you should be able to see the charts.
Yep, I can see them now.
Let's just zoom out. All right, let's put up the candlestick.
Woo, this is just ridiculous.
It's insane. Look at that.
Yeah, this is ridiculous.
I mean, I think that's like 2% or something. It's dropped.
Yeah,
like,
it's something crazy.
Amount. Yeah, there was a perfect opportunity just after open, right here. It was on a zone. I mean, it doesn't look right now because the volume profile's changed. But let me draw a fresh volume profile on how it would have looked just before open, and then that'll be easier to visualize, right? So
right.
had this beautiful gap in volume right here, which I drew out, and then if I go draw it up to market open and a little bit more, so market open is 130 here. So yeah, didn't quite touch it. It got very close. Didn't quite touch it. So the area I was looking at was right here, just a bit, bit higher.
I can see that.
And it spiked up. It just never got there, and then it just boom, 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 and it just never came back. Never came back. I mean, I would have targeted the low here back to this area if I got into a short, but
right.
I mean, I did not expect any of this. This is ridiculous. And there was another little gap in volume where, again, I don't want to trade it because this scares me at the moment, right? Because you just don't know, like, when is it going to stop? Well, I could have shorted it here, but again, like, it is
chasing it. At this point, you're chasing it.
Exactly. You're way too low down. I mean, the next area, big area would be, I haven't actually got it drawn out, would be around here. And then, so there's a few areas it could drop to, but we're talking, this is still a massive drop. So
it is.
I'm a little confused because normally it respects these levels quite well. I'm a little bit, I mean, look, it's not slowing down. I don't know where it could stop today. If I put back the volume, the daily session volume, there's another area right here where maybe today it could stop at, but this is kind of no man's land right now. Like, I don't know. Like you said, don't chase it. I'm not comfortable. Definitely not comfortable.
It's Friday. Yeah, it's Friday. It's literally the last Friday of the month. Like, whatever quotas they had to meet, maybe whatever that would be, behind the scenes stuff, which we have no idea about, right? That's above our pay grade in essence. They had to get rid of something, and it's showing out on the charts here for sure. Don't want to get, we call that trying to catch a falling knife. You get sliced up trying to catch that.
Yeah, absolutely, man. Like this was insane. Like the volume that came
It
in.
is.
Let's go to
It's
market
literally
open.
no buyers when you're looking at this. Like, not really.
Yeah,
All sellers. Like, that's crazy.
it's like
Crazy,
everyone
crazy,
agrees.
crazy.
Like market open, we had some sells come in, and it kind of pushed up, almost got to that kind of area, that high, but then
Yeah.
we just had, look at these numbers, basically 1,000,
Mhm.
another 1,000, another 1,000, another 1,000, another 1,000, all
Yep.
just stacked up. Not sure who was buying here, but maybe because it was the low, some people bought another 1,000, and then just these just big numbers, like thousands. Like normally, you would see like 1,000 plus occasionally, right? Like significant
Right.
areas, but my God, this is just 1,000,
Yeah.
2,000.
2,000.
Again, 1,000, 2,900, and I'm just watching this drop, and I'm like, come on, slow down. Give me something. Give me,
Yeah.
give me some little pullback or something.
Please,
And
please.
no, still going down. I'm like, it's just not stopping, is it? And then we kind of got to this area where slowly, it kind of slowed down a little bit, right? Slowed down a little bit, and we started seeing some, people getting out the market. This is definitely sellers exiting,
Mhm.
taking a lot of profit. And I thought, okay, here we go. We might get a retracement now. We might get a retracement. And we did have, this gap in volume right here. And again, but I was just too nervous to actually try and trade it because it was just so, it didn't quite reach it again. I was like, okay, we're coming back for a little retracement here. If we can get into this area, there could be a nice short, right? We could sell it
Yeah.
nicely in here if we get to it. And then, we could have something like this. It just didn't want to reach it. Got very close, but I don't want to enter prematurely, right?
Of
And
course.
there was nothing really showing me like near that area where, sellers are coming in. They got in quite low down already. Like down here, they started coming back in again. And then it started pushing down. And let me just get rid of that because that's in the way. And then look at this. I had to draw this out because this is just insane. Again, another 2,000, 1,000, 1,000. I'm like, bloody hell. And then now again, just, a few minutes before we started the session, another 2,000, another 1,000, another. It's just not stopping. And it's not retracing. It's just not retracing. Like the biggest retracement we had was this. And okay, like it almost got to an area where I could have shorted it, but it just refused to go that little bit more. And then it just piled back down again. And I mean, it's incredible to see, but at the same time, it's like, damn, like the only opportunity was literally just before this session started, right? Nice gap in volume right here. I had it drawn out, but truth be told, like, again, like we did dip into it. Technically speaking, it's a trade, but by the time, again, these heavy sellers started coming in, we were quite away from it. Am I really going to be wanting to enter this low down for a short? Like, I mean, it would have worked out nicely, but
still,
like any moment, it could stop.
Yes, just too much, right? Like this thing is already down. When I look, it's already down. What is this? Actually, it's just now at 2% now for the day. 114 points down a whole 2% today. Insane.
2%. That's insane, man.
Yeah.
Like
huge move. And it's still going. It's still going too. So
yeah. I mean, I think we're actually going to get down to this level. Hell, potentially we could even get down to here. Like this is insane, man. This is absolutely insane. Like these days are very, very rare. We had a day 2 weeks ago quite similar to that. But there were pullbacks. Like if you're looking at, when this whole sell-off happened 2 weeks ago, like we had these big sort of pushes down, right? But there were little bits of pullbacks, right? into these kind of areas where you could have shorted it. You could have caught it, right? And you had like some aggressive moves to the upside a little bit, right? Again, here, another aggressive move to the upside, right? Before it tanked again. But today, we had nothing like that. Like the biggest pullback we had was, let me go back to it. I'll just do this, makes it easier. There we are. I mean, we barely even had a green candle. I mean, technically green candle, but come on. I mean, that's basically a doji,
It's so
right?
little. Yeah, it's so little. It almost doesn't even count.
Exactly.
And the
body
crazy thing is,
basically...
these aren't just regular size candles. These are decently sized shift candles, right? Like little to no wicks at the top, you know, no wicks at the bottom. They're really moving this thing. And even right now, it's still moving. They're moving this thing.
It's just not slowing down, is it? It
Yeah.
is. It's like a train.
They're running like they got somewhere to be.
Yeah, man. Insane. Like, I know I keep repeating myself, but damn, what a move down.
Definitely huge.
I mean, like, look, I don't think, even if you caught like a short, I mean, you would have got out a long time ago, because no one would, I mean, I don't know, maybe a swing trader, obviously different, but for me, like, there's no way I would ever have thought, yeah, we're going down here today. Never would I've expected that. Like, it's just, you can't predict these things, you know, like maybe in the long term, yeah, we're going back down to here, but in a matter of a day, that's insane. I need to look on the higher time frame how this looks like. This is just, let's look at a 4 hour. I'm going to get rid of all these drawings.
Look at those. Look at that candle.
I think that's the biggest 4 hour candle we've had in a long time. Let me measure that candle. I need to get a measurement. And keep in mind, we still got 47 minutes of this, and it ain't slowing down.
Yeah.
So that is 349 points. All right, let's 349 points to get the measuring tool out. That was a big one. Almost, but not quite as big. That one's quite big. No, that's barely 300. This is like the biggest 4 hour candle we have had.
Monster candle.
Oh no, except for this candle.
There we go, man. That's a huge one. Yeah,
whatever happened here. 18th of December, fair enough. But damn. But that happened. That happened at market close.
That was last year.
Yeah, I think that was FOMC or something. That happened 7 p.m. UK time. And that's usually when the FOMC comes out. 18th of December. I'm pretty sure that's FOMC. Let me just double check. FOMC 18th.
No, that's definitely the largest candle this year.
yeah. That was FOMC. So fair enough. That's news based, right?
Right.
So, I mean, this candle, there was no high impact news that came out today. So this is like organic. This is raw. This is legit. This is
yeah. This is the end of the month. I'm dumping all my stuff.
This is insanity.
It really is.
Damn.
If some news comes out later that makes it like even worse, we're gonna know that like this was some inside trading going on.
Yeah, this the amount of contracts that were traded. That's not normal amount. That's not a normal amount. This was something else. I'm not saying I'm not accusing anyone of inside trading, but hey, I mean,
someone seems to know something we don't.
Exactly. But now I'm looking at the long term and wondering where can it actually stop. Last time it stopped down here. If I get a volume profile, stretch it across here. Yeah, we could. I mean, yeah. It's hard to say, man. Like, it could stop. There's so many areas it could potentially stop at or bottom out at. But I'll definitely put this as one of the major ones. If we get here, then definitely going more bullish. But I don't know, man. I feel like this could be the beginning of a crash.
Yeah, it's definitely looking like it. This looks just insane.
We're getting the
Insane.
structure. We're getting proper bearish structure on the long term now starting to form, right?
Man,
Push down,
we got
retracement, and a
we
continuation
got
now.
Andre saying U.S. consumer confidence is at past recession levels. Yeah,
Yeah, with all the
crazy.
tariffs and everything as well. I think people are just dumping shares right now.
Yep.
I think we could be at the beginning of a crash. I'm telling you, I don't say that lightly as well.
Right.
I wouldn't say that normally, like, oh yeah, we just had a bit of a bearish day, it's a crash.
Right.
No. Like just looking
Everyone's
at
running and screaming.
the longer term structure, like on the daily, we're already starting to see that bearish structure being built now. You know, we took out these lows with that push down. We had a retracement. Now it looks like a very strong continuation.
And that's the exact move I would take, as you know. You
Yeah,
got that
exactly.
break below, that pullback, and drop. That's the move.
Exactly.
And so this is literally, like you're saying, it's just starting.
Like the last time we had anything, I mean, look, here we had technically slight bearish structure, but the move are just not the same size, right? The last time we had that was COVID, yeah, which makes sense, and that was a crash, right?
Right.
But COVID was a very unique one because while a lot of companies lost money during COVID, there were certain companies that excelled. So especially on something like the S&P 500, there were certain companies that are doing really well. Some were just, completely, disaster.
Some got
Basically.
crushed because if you were dependent on that foot traffic, but other companies like Zoom and I'm sure DocuSign, those type of companies, went through the roof.
Exactly. I mean, here, look, back in 2020, this crash right here, this is probably the closest thing we have to it, right? These really strong moves down, slight retracement, and then these really nasty bearish moves back down again. And yeah, we're starting to see that happen. I would be, yeah. Look, it's not officially a crash, but it's looking like this could be the start of one. And let's be honest, a lot of people, I think Andre said as well, right? Consumer confidence in the US as well. People are kind of right now at this period of time, people are expecting a crash, We are expecting that kind of, a crash is kind of imminent at the moment. So this could be it. This could be the start of it. Well, technically it started like 2 weeks ago, but you know what I mean.
Right. No,
but yeah,
definitely looking like the start of something. Like this is not looking good, not at all. Now the next thing would be to be able to capitalize off of this stuff, right? Like we got to be able to position ourselves properly as traders to, be able to exploit this move for sure, or these moves rather.
Absolutely. I mean, look, luckily as traders, we can short the market, right? If we're buying stocks, we'll be we'd be a little worried. But then again, eventually it'll bounce up and you're not looking to make day trading profits with a stock, right?
Right.
So as long as you hold
Crazy
it.
enough, on the same topic, I always bring up that show Billions. That's how Bobby Axelrod got a decent amount of the money that he made. He made like $750 million in a day when 9/11 came. And he shorted like hotel chains and airlines companies, just literally went all in.
Yeah.
$750 million in a day.
Crazy. Absolutely crazy, man.
The foresight to know to do that, though, that's like top level.
Exactly. I mean, yeah. But that's the reality, right? Even during tragedies, people profit from it. That's just the reality of this industry, sadly,
Yeah.
But yeah, damn.
They say it's a tragedy, but in some languages, it also means opportunity, which is very interesting, right?
It's true. Yeah, absolutely. But damn. I mean, look, if we just measure this leg, right? The markets are. If we measure this leg and then measure it, so 2614. we can kind of get an idea where it could maybe. Again, this is stuff I don't usually base it on stuff like this, but the market likes to move in that line. That lines up to gap in volume as well. So that could be potentially my bottoming out zone. If this is a continuation leg, we're looking at. But again, that would, I mean,
right where this candle just closes at, you know my pattern. That thing looks short. And actually, this isn't going to be a small move down. This thing looks like it'll be, going all the way to that second, third point. Yeah. Crazy.
But here's the thing, right? I'm now questioning: is that what they want you to think? Do they want people to be shorting the market now, and then next week we have a harsh reversal to the upside again? I don't know.
To be totally honest, I could totally see it. Right? That seems just like this administration to do something like that, right? Because I always think that Trump is doing some crazy stuff where he's telling all his friends, like, don't worry, guys, I'm gonna get it to a blue horseshoe. What is it? Anacott loves blue steel, or whatever the saying was, right? Like,
yeah,
get it down to a certain point. Once it gets to 4,000, everybody buy in. We'll take this thing to the moon. So all his friends get rich in the process, right? Everyone else is panicking.
Exactly. Because look, the contracts that were traded today, these are the biggest of the biggest institutions playing around here, right? These aren't just small retail traders, right? These are huge. We're talking, you name an institution, it's shorted today. Basically, everyone is piling the volume on today. So this is like a collective move now, and everyone, like you saw, everyone agreed. Do you know what I mean? Mm-hmm. Everyone wanted to short the market. This wasn't like, some people want to buy, some people short. There's a bit of a battle. This is just, we're shorting the hell out of this. And it was like, it was pinpointed to the second, right? Like bang, 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 bang. That is rare to see. Like, you don't.
Because if you think about it, there's typically at least some type of indecision there, right? At least a few buyers, but even the buyers turn to sellers. Like,
Exactly.
I'm not getting caught up in this thing.
Like, this is madness. The move today, absolute madness. So that I feel there is a bit of, I mean, you can call it insider trading, or you can call it coordination. I don't know. Something was a bit different with the market today. On a Friday, I don't know. There was no immediate obvious reasons. I mean, this moved harder than FOMC sometimes, right? This moved harder than.
That's the crazy part.
Do you know what I mean? Like,
this looked like the NFP mixed with FOMC mixed up with CPI type of move.
Yeah, I mean, like, if you're looking on the 5 minute, all right, not one individual candle is that great, is that big, right? Whereas normally when you see on like news, right, like you would have one giant candle when that news dropped, and it would like slow down. So like, but it was the consistency. When you look at the volume, it's just like layers. It's like institutions were just selling at every immediate. As soon as the liquidity was provided, bang, they sold. Like on every single bit. Like you can just imagine the amount of like potential liquidity sitting around like in all these areas, right? Random places where there's, buyers, so to speak, right? And these institutions were just taking every single available buy order, right? So they can get into a sell. They were just eating up every single available, like a vacuum cleaner, right? Just hoovering it all up, and there was nothing stopping it. No matter how many buyers tried to push back on that, no one is stopping that kind of momentum. And then eventually,
it's like trying to step in front of a moving train. The buyers, that train was moving so fast, they didn't want no parts of that.
Exactly. And you can literally see, even on the 1 minute. Now, normally the 1 minute is, because it's so small, right? Like you don't get that much like volume, like built up in a tiny area. But even on the 1 minute, we're seeing 1,000+ contracts, right?
In minutes.
Like that's insanity.
In minutes.
Like in a tiny little area, we're seeing these huge, just massive orders just, being executed. Like this is insanity. You don't really see that on the 1 minute. Like I'm kind of curious to drop down to like a 10-second chart and see how that looks, because I want to like this is like rare. So for me, it's interesting just to see like the kind of the levels, I'm gonna have to actually find a timestamp for it, because I ain't gonna find it otherwise. What time was it? It was 16:16. All right, 4:16. Let's do this. Let's do 15 seconds. Give it a bit more time, and then go to 4:16. Here we go. You could probably see like it's just one giant order.
Right.
There it is.
Say 10,
still there.
10,000.
So now it's smaller
in 15
than
seconds. Wow.
Less than that. That's a 5-point price level. All right, let's drop it down to 5 seconds. Right. So the price level gets smaller now, right? So you're looking at like an even smaller price level. So let's see. Zoom in. Let's see if we can spot. All right, breaks up a little bit. Well, actually, no, 900 right there on a tiny price level. You could probably see it on the 1 second chart, which is insanity. Crazy. I mean, if I can actually find and zoom into it quickly on the 1 second, this is where it gets a bit hard to like.
Right. But still, man.
Nah, I can't load the data. It doesn't have that much. Damn it. Oh, no. Wait a minute. What's going on? No. Oh, no. It is loading. Here we go. Trading view. Thank you for actually keeping this data long enough.
Wow.
Because once it's gone, it's gone.
What?
All right. This is insanity. Let's see exactly where some institution just placed a mammoth order. And this happened throughout the whole day. This is just like more recent example.
Right. That's the craziest part about it. It's happening over and over and over again.
I see. Look at that. 1,000 contracts in 1 second.
1 second.
You don't see that. I'm telling you right now.
This is just incredible.
You never see that. That is insanity. That is institutional activity that, like if you ever needed proof of institutional
confirmation,
activity,
this is it. Yes. Man, these guys know something we don't know today.
Bro, I'm telling you, this is insanity. Like absolute insanity in 1 second. That's insane. Like these numbers are all like relatively small now. And then, oh my, that's insane. I have never seen
1 second. In 1 second, that is crazy. Crazy.
Today, honestly, in hindsight, today could have been a day where you could have traded the 1 second chart. The moment you see 1,000 contracts be dropped, jump in, man, because you know.
Yes.
You know that is going down.
These guys are playing hardball today. That is insane.
Absolutely
insane. You literally don't even see 1,000 contracts moved in, a 15-minute hour block sometimes. So to see it in 1 second, wow.
Yes.
Wow.
It's beyond.
I'm almost speechless. Yeah.
So am I, man. So am I. Like it is insane. And that was just this little area here. But look, we got more here. It happened constantly. Just right this second. 1,000 contracts. Let's drop to like the 10-second chart. See if I can see it. Come on, trading view. Load. Don't let me down.
1,500. These guys were not playing today. Not one bit.
I think it's kind of crashed.
Said, look,
Okay.
Sam, we already showed as much as we can show you today.
Oh dear. You see on the 10-second just a minute ago, that wasn't one giant order. That was a bit more of a collective, but it wasn't a
Right.
giant order. But the other one, that was a giant order, just one price level. Like you're
Almost
seeing like
unbelievable.
absolute insane.
This is definitely the day where if you were buying, like, what were you looking at?
Yeah, I mean, like, I guess some people though would see it as like, oh, it's been such a harsh move down. There's got to be a retracement. They might have tried buy against a retracement, but like, yeah, that would be scary to
Mm-hmm.
It would be genuinely scary to buy. There's no real, like, you do have bigger binums, but again, these are just people taking profit, people getting out the market, all these sellers, right? So we're going to see huge buy numbers appear like before market closes, right? As long as it keeps dropping, you're just going to see massive buy numbers appear, and then eventually the market will just stop moving. But they just haven't given up. They haven't given up. Like normally you would see like heavy selling or heavy buying happening. It moves in their direction, and then they kind of give up. They take their money out and stop. Right?
Yeah.
They just
said not today.
Haven't stopped. Like the amount of
the sellers have had the wheel entire day today. Like they're not letting anybody else drive except the sellers.
Yeah. It's like, on Instagram when you see people do these screenshots where it's like they just place like 100 trades, all the same trade basically.
Yeah.
And then show their MT5 and it's all blue and stuff. That's
crazy.
basically what they did today. Like, that's what institutions did. They were just hitting.
Get it again. All you hear is click, 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 click.
Yeah. That was just stacking orders like crazy on as much as they can. Like, damn. Well, what a day, man. What a day to experience that. That is unique. It doesn't happen every so often. Every few years you might get something like this. So it's great to actually look live and see it.
I see your boy Robert said something. He says, I caught 200 plus pips on the drop this morning.
Nice, nice.
Said,
well, Robert, I'm glad you caught it. I'm glad you caught it, Robert. I sadly didn't catch any of it. It just kept moving away and moving away. And then every time it had a potential retracement and it got so close to the area I wanted to sell and then it dropped again. I'm like, damn, like that close. Why didn't you just move up a few more points and then I would have been in the market?
Right.
It was one of those very annoying days because the amount of profit you could have made, man.
You would have been all over it. He said, I've been waiting for this drop for a week and a half. That's crazy.
That would have been such a good end to the week, man. Or end to the month, But hey, look, I'm still happy. I'm not going to complain about missed opportunities,
For sure. Black Swan event.
I could have been, buying right at the tip, and then
So it could have been much worse.
I could be like, there was someone up there.
Right.
Yeah, there were people up there buying a few people you saw. Like you could have been one of them, but damn. But yeah, that's all I can show about the S&P 500 today. What a madness. I'm gonna set an alert. Yes. Have I got an alert set here? I can't. Yeah, there is an alert set. I mean, it's got to stop at some point. I think maybe this is the level it will stop today. But I would have said the same thing about this level and at this level. So I have no confidence in
117 points. Crazy.
2.6% drop. Yeah, there's going to be a lot of talk about a crash coming after today, I think. Because now it's built like the structure.
Yeah.
Now it's built the structure.
What they tend to do is with the right, like they in essence reinvented the word, right? So if they used to say, oh, if the market's down 30% in a quarter, then it's a recession. They literally changed the definition of it so they can say, oh, it's not a recession yet. Like, wait, what are you saying? That's the epitome of moving the goalposts.
Oh, absolutely. Like, we had the same thing in the UK. Like, everyone, the thing is, every person, the average person, knew there was a recession because you could feel there was a recession. Everything around you is telling you, hey, we're in a recession. Everything's expensive. Money's going down. Like, inflation's like everything told you we're in a recession. You live in the country, right? So you can tell, yeah, we're living in a recession. But officially, no, it's not quite yet there. It's like, it doesn't matter if it's officially based on whatever measurement statistics you have. Like, does it feel like a recession? Or does the average person feel like we're in a recession? Yeah. So, do you know what I mean?
When they say, I don't know how it is over there, but when eggs are super high, groceries are high, like we see a lot of stuff where like there's like these Instagram pictures or videos, right? And they're like, look, I went to the store and I got some eggs, some bread, some meat, whatever, and this was $100. And it's like, what? That was $100? Like, and it's crazy how things happen because here in Mexico, we don't have any of those issues. If I spent the $100 at the grocery store, I'm having a cart full of food, like a cart. There's eggs everywhere. Like a 12 pack of eggs is so cheap. I don't even know how much it costs. It's that cheap.
Yeah.
So it's literally the complete opposite.
Wow.
But when you start hearing and seeing everyone saying that, it's like, oh, this is getting a little scary. We all seen this movie before and it didn't end well.
Yeah, no, absolutely. But although I'm calling this could be the start of a crash, I'm still going to keep the possibility that that's what they want you to believe. So
yep. So it got to be
because I have a feeling that this could be a big trap right now. Get everyone to want to sell in the next week, and then we have a nice move up. But I don't know. For the first time in quite a while, do I have any general direction or bias right now moving into the next week? I really don't. Because the critical side of me, the paranoid, skeptical side of me feels like this is what they want you to do. If everyone else is thinking the same thing, and generally speaking, the majority of people lose in trading, you're probably on the losing side. And you see what I mean?
100%.
If something is too obvious, it doesn't work out.
Then it's not. It's the other way around. You got to reverse it. It's just scary to do so. I see Robert, Mike, I'm gonna watch Solo Living this weekend, binge it all. Oh, Billions. I think he's talking about Billions. Yes. That's my hands down number one favorite TV show of all time. They do a great job with that show. It's like 6 seasons, I think 12 episodes each. I'm embarrassed to say this, but I've probably seen every episode like 10 times, minimum. I absolutely love that show, especially like for us traders. I love to get a glimpse into that world, right? At like a hedge fund at that level. I've learned a lot. I've seen a lot, and I was like, oh man, that's how that works. Like a lot of terms, you end up looking stuff up, and I'm like, oh, that makes sense. So that's a great show, especially for us traders. So have fun, Robert. All you need to do is watch the first episode, and you'll be hooked from there. I promise. Cool. Then we got Andre SPX moves pretty much the same as NQ. Expect the same move. Yep, pretty much. I got those 3 coupled together on my charts as well. They pretty much move the same.
And then you guys, I've been watching the weekly. I've seen it, and it bounced back down on the bottom of the trend line channel. Actually, that's a good idea. Let me have a quick look at the weekly. Sometimes in times like this, it's good to have a longer look.
Super one.
Yeah, I mean, look, we're not quite there, like in terms of a crash. Like we've had, I don't know, that It's a little, I wouldn't call it a crash, but it's a small one. It's a small, like that's a proper crash, yeah.
Right.
It's starting, I don't know, man. I don't know. It's hard to tell. It's just the way it moved today. I think it's not so much like just looking at the overall candle or something, but the way it moved. It was like a train.
Yes.
You don't. It was
Yes.
disgusting the way it moved.
A bullet train.
Yeah. Damn. Wow. Well.
Yeah, this thing is still just dropping. It's crazy.
I mean, the month must be quite far down. The monthly. See, like when you look on the long term, then it just kind of it doesn't look that bad, right? Like the monthly chart, it's like okay,
right.
But
to know the majority of that happened today, that's scary.
But look at this. Like we've had the expansion part already, right? We've had the expansion part. So we had this leg from the last crash, right? All the way up. That was like, I can't even look at that number. But a huge amount. You know what? Let me just do it like this rather than reading out such a long number. You know, we've got that. And then, yeah, they kind of like, they match up. Like even just the size of each leg matches up.
Right.
We've had that expansion from the last, what I would say, you know, the COVID crash, so to speak. And now, is it time to go back down? And if it is, I'm going to take like the size of the normal crash and plop it up on there. Oops, sugar cubes. 1 minute. I've got so much crap on my charts. I do apologize. Yeah, that would line up with that area there. I think if we do break these lows that we had last 2 weeks ago, I think it is, then we could be going down all the way back down to here. Let me move that all the way back down to here before it's finally over. That could be a possibility. But, you know, I'm not saying I would like that, but at least then once we break these lows, I'll have a bit of direction. Do you know what I mean? We're kind of in that middle zone where, although it looks right now like, yes, it's about to continue and keep going down, we're still very much in this kind of choppy middle zone area. It is plowing through every single level like it doesn't exist. But
like it's no tomorrow. Right.
Will it do the same on Monday? Do you see what I mean? Or Tuesday or Wednesday? Will it have enough momentum coming down? Or is that just like an overall trap and then we're going to be going up? Either could be true at this moment in time. But if we do break these lows, then I'll have more of a long-term direction. Say, right, every day when I wake up, for the most part, I'm going to be more inclined to be shorting the market than buying the market. And that's
100%.
really important to have. You know, just you can still buy the market in a bear market, of course, and you can still short the market in a bull market, but it just moves easier when you're with the overall direction.
Yep.
You know, just like this zone I had. And then I remember when we got there, I was all bullish here, bullish. I was doing really well. When we got to this zone, I think it was, I remember on live stream, I said, this is where I'm going to start looking at bearish again when we get to this zone. Bearish for the next couple of days, because I thought it would last literally 1 or 2 days will go down. And then, you know, there will it will stop somewhere around here. It will stop. That's what I thought, right?
Right.
And then today, and it looked like it was going to do that yesterday. Like we had kind of like a push up again a bit, kind of a bit of indecision day. And I thought, okay, yeah, well, you know, it looks like it wants to probably start moving up again. And then today it just boom, plowed through.
Went to crap the entire thing.
Yeah. But yeah, that's it for me. Michael, if you want to.
Yeah. I'm still mind blown. I'm still flabbergasted throughout all of this. Like, wow. That's all I can really say. This thing is down now 5.3% for the year. and down 2% for the day. That is crazy. If you think about it, it's down 113 points. It's down 113 points for the day, and it's only down 300 points for the year. So a third of what is down came today. That's crazy.
Insane, right? Like
yeah,
absolute insanity. That's like Bitcoin level of movement, right? That's like Bitcoin volatility.
Insane. And anybody who, I feel sorry for anybody who just got in the markets and just started trading and was on the wrong side of today. Like,
yeah,
you're probably never trading again.
But just know that's bad luck.
Yes.
You just picked the bad day to trade. This isn't the norm.
Right. Well, cool. Let me get all of this stuff off my chart for one. What does Jannie say? I got a lot of jewelry on my chart.
That's it.
That was
like
funny.
that time.
Cool. So I will go through GU and GJ first. I don't have too much action on these, and then I'll get into the other pairs that I was looking at for today. I actually did take one setup today. It went decent. It went actually to halfway, moved my stops to break even. And actually didn't happen too fast. I ended up stepping away, but I had alert set. So we'll get to those in a second. One of them I didn't take, which was EC, because it broke one of my hard rules and it ended up going. So for me, it was an outlier. So we'll get into that too. So we'll go over GU, GJ, AF, EJ, and EC. That's what I was pretty much looking at for today. Right. So yeah, so for me on GU, kind of still sitting in the same little funky range part, right? Where we got this, still got this same little peak up here that I'm obviously not interested in at all. And then we had this 1350 cross, right? So let me just type this up here. So this would be my peak high. Right, and then we got this 1350 cross here. So I know I'm in level 1 once that 1350 cross. I'm gonna just put L1 for today, make it easy. I know I'm in level 1 there. Right, so I'm looking for shorts, obviously, right at this point. Once this, as I mentioned, once this comes down here and touches the 200, I'm no longer interested in the level 1 move because I only want it to go to the 200 the first time with me in it. I don't want it to pull back and then go for a second time. So that's, this part's a pass. So I'm not interested in level 1 trades at this point. And then we have this 5200 cross, right? So now I know I'm in level 2, right? Once this 5200 cross, I know I'm in L2. So I'm looking for shorts, looking for more or less M's off the 200, right? Now this is really, really ugly for the simple fact that when it's made this move here like this to go down, we didn't have a reload. Remember, I always mention when I see the reload, I want it to come above like it does over here and below. But this is so faint, it kind of barely touches it. I don't like that. So I was staying away from this move, as I've been saying pretty much all week. Let's kind of scoop this up. If you look at this, this is super small, like the yellow market baseline going above the static 50 line here is so little, I can't even see it, right? It's super little. So I'm not interested in any trades in level 2 that does not have a reload. For me, it's a total pass. Man, where's this thing for me to take this down? Come on. Oh, there you go. All right. So for me, this move is a total pass. I'm not interested in this move at all, right? From here, I would more likely be expecting this to come on down, make some type of W structure, right? And at this point, this is how I know the peak low has been set in, right? So I'll just put peak low here, right? Same structure that I always draw for you guys, right? Just looking for the move to look something like this, so I can know where I am in the cycle.
Yeah.
Right. If it doesn't look like this, and I can't tell where I am, I'm just not interested in it at all. Right. So we got that peak high, level 1, level 2, then peak low. Right. I'm not interested in this at all. Well, wouldn't have been until it comes back the other way and doesn't move like this, going back to the upside. I'm interested in the move here going long. Of course, that did not happen. Right. It's just like GU to not really give you everything. So this is kind of actually resetting at this point, right? So if you look a bit further, you can see one, we have this 1350 cross again, right? So now we're going back the other way. It's kind of resetting off this level here, right? 1350 cross, level 1, right? So I can tell that from here, I'm in level 1. And then right after that, it kind of went up. It really didn't give a chance to run down. So the EMAs kind of didn't like catch up really. So that's why we have a quick 5,200 cross here, right? So now we're in level 2. So this was a very quick move for the simple fact that it didn't really go far for it to turn around. The EMAs didn't really have a chance to spread out. So this is actually turning back around for me because we have the, again, 5,200 cross, right, for L2. So for this move, I am only looking for longs at this point, right? So I want to see a move happen like this, where maybe it just goes up a little bit, and then I'm looking for that W structure off the 200 going long, right? My stop will be below here, my entry will be somewhere here, and my TP will be somewhere up here, right? As long as this made sense R to R wise, we can measure it, then I will be all over this, right? Which it looks like it does. So you got a nice 1.7.2, 1 for 7.2, right? So risking $1 to make $1.72, not bad at all. That's what I want to see on the chart. And simultaneously on the actual TDI, which is the bottom, I want to see this market baseline go back below here, right? And come back up like this and make that type of move. Because once again, with my M and W's off the 200, I need to see a reload, right? I need to see a reload. For me, if it's no reload, it's no trade on this particular setup. So GU is nothing for me, like at all. Super ugly. It's kind of just ranging a bit, just going up and down. We got all of these crosses, right? We got this cross. We got this cross, we get this one. There's no real direction here for me at all. So nothing for me on this particular one. And as you guys know, the very first thing to be able to identify is where am I in the cycle, right? Where am I in the cycle, right? That's 1. 2 always is looking for that pattern. That pattern would be that M or W. That pattern would be that bounce off the 50, whatever that may be, right? Next would be higher time frame confirmation. Oops. Right, and then 4, I'm looking for that entry signal, right? So with that being said, looking at number 1, I can automatically see that I'm not in an ideal level, right? This setup hasn't really fully come, right? So 1350 cross, I was in level 1, 5200 cross, I know I'm in level 2. We're in the middle of that, right? So I know I am in a cycle, but there's no pattern off of this just yet. The pattern has not come yet, right? This pattern needs to be that W structure for me to even be slightly interested in this. And of course, everything else needs to confirm as well. Need the higher time frame confirmation on the 4-hour chart, and then some type of entry signal, right? Which would be that close above the 13 EMA on the 1-hour chart, right? So nothing here. GU, I'm not interested in one bit, not for today. Obviously today's Friday, so maybe next week we can get something off of GU. But for now, this is nothing. Next up is GJ, right? So GJ was a tad more interesting, but not much. Right, so same exact thing. Right, so here, as you can see, first thing we have is our 5,200. Whoops, 5,200 cross here. Right, that's the first thing we have. So I can tell it automatically that I know I am in level 2. My 5,200 has crossed, and I am in L2. Right, as soon as this happens, I know that's where I am. The next thing we have, as you can see, which is extra confirmation that we're in level 2, is this 200 800 cross. Right, so from here, as always, I'm looking for some type of W structure, right, off this 200 EMA, which it did happen. But I think I was speaking with you and Jannie yesterday, Sam, about this happened on Sunday. Yeah. I don't take trades on Sunday at all, so this is nothing, right? You can zoom into this. If you were to enter this trade, you literally would have got in right here, right? Once you see this close right above this 50 EMA candle. I'm sorry, 50 EMA, this green one here. But this happened on Sunday, right? So this was nothing. You got to let that move go. The next move, if you remember, as always, I'll be remiss if I didn't write this. We'll draw this out rather. All right. Always after the W, because basically, let's say this move, which you would have took here, which is that confirmation, is this move here in the cycle, right? Same exact move. That's that W structure with the close above the 13 or the 50 EMA, depending on what it looks like, right? So next, once this runs up, what we're looking for is this bounce going long, which would be same thing here. It runs up, bounces off this same exact area, right? So this move, right, is the same thing as this move here. And I'll just draw a vertical line to be able to see it, make it a little bit easier. But once this, actually, open up just a bit. Right, so once this candle closed here above this 13 EMA, this was the move, right? Now, this wasn't that great for the simple fact that this happened in Asia, which is pretty lame, right? You can take this in Asia, seeing that it's a JPY pair. So if something was to set up, you can. But for me, I don't really like to take Asia pairs at all. And even if I did, it needs to be pristine setup. Like it needs to be absolutely gorgeous. And I wouldn't put my full position on it, even if I did, right? But yeah, this would have been the move. You could have taken this. You would have entered here. Your stop would have to go below this point here, right? So that last little swing point. So below there. And then you could have targeted this high here, right? So this would have gave you a nice 1.2. Risking $1 to make $1.20. Not bad at all. Even our TDI agrees with us, right? Here, if you're looking down, you can see that the market baseline has crossed to the upside above the static. So we're good to go. We're only looking for longs. So our chart and our TDI agrees with each other exactly, right? So this would have been that next move looking at GJ, right? And of course here, the only thing you would have needed to have is the 4-hour confirmation. So this is the 1-hour chart. You would have needed to kick it up to the 4-hour, right? And then zoom in just to make sure it's priced on the right side of the 13 EMA. Right here, yes, it is. Price is already above the 13 EMA. So I even have 4-hour confirmation, right? So we know where you are in the cycle, right? We're in that second bounce. We're here after the W structure. Let me scoot this over. Yeah. Whoa. Right. So we know where we are here. All right. So coming out of this structure, once we got that cross and runs up in the bounce, we know we're on the structure, right? We have a pattern, which is this slight move off of the 50 here. We know we have higher time frame confirmation because on the 4-hour chart, the price is above the 13, right? And then the last thing we'll be looking for is what? That close above the 13 EMA, which again, if you zoom in, this is the exact candle, right? Right after as soon as you touch the 50, the very first candle that closed above the 13 is where your entry candle would be. So none of these candles touched or closed above the 13. Even though it got close, this one went above, came back below, it didn't. Same thing here. Boom. This one did it, right? This is the candle that actually closed above the 13 EMA. And simultaneously, we had our RSI line, which is the purple one, cross above the signal line. This was a good trade to take here, right? So we had everything we really needed on this particular one. As I just mentioned, the only thing that was wrong with this was this happened in Asia, right? So not too cool about that. And then obviously this didn't even reach TP, right? So what you would have needed to do was, once this got to around here, which is the yesterday's high, or one of yesterday, day before, once this got to here, you would have wanted to move your stops to break even, right? Because for me, typically once price gets about halfway to my take profit, that's when I move my stop loss to break even. So I'm taking my risk off the table. And I'm typically taking partials as well, whether it's a quarter of a position off or a half a position off. I got to pay myself for sitting here in this chair and doing all this work.
Of course.
Right. So, and you'll see why that's so important later when I get to EJ. We'll end with that one. Right. So this would have been a great trade if you were taking this in Asia. Once again, no, you didn't hit full take profit, but yes, you took partials off this trade. You didn't lose any money, and you lived to trade another day, right? So not a bad setup here. Now, even though this did turn back around and just kind of continue to go back up, and eventually it did hit TP, I would not have taken this again. That's just, I have a setup for this first entry. This, if you were to take this again, for me, there's no setup for that, right? This would have been, oh, I'm mad that TP didn't hit. Let me jump back in. That's a very impulsive thing to do, right? So I couldn't justify why someone would take this, because this candle did close above the 13, right? And then kind of ran on up. But for me, that is not a move. It's just not a move at all. There's no setup. Out of my 5 setups, I don't have anything for this. If it was, it would be called MSU, which is making stuff up. I'll be making something up trying to jump into this trade. Right. So nothing there on GJ besides those two. Those two moves, rather, right? One happened on Sunday, which I'd stay away from. And then 2, I wouldn't be in this because I don't trade Asia. It would have to be, again, beautiful, like a beautiful setup. I call it a Mona Lisa. It would need to be a Mona Lisa setup for me to actually enter it. Great R to R, of course. 1 to 2 is decent enough. I would have loved to see it if I had a Mona Lisa and it was like a 1 for 2, then yeah, I would probably take it in Asia. But I still wouldn't put my full position on it. I think we were also talking about that yesterday too. Sam and Jannie and I were speaking about it, and Asia is typically that session with the least amount of volume, right?
Yeah.
I think on a scale, 70% of the transactions happen in London, another 20 of it happens in New York, and then that last 10% happens in Asia. So it's probably why this didn't fully go to TP until when? Around Asia gap time, or closer to Asia time, right? Once you got that real momentum and that real volume coming into the market. So So yeah, that was it on GJ. I'm not really interested in anything else on there. So those are the main two that I pretty much look at every day in addition to the other ones, but I kind of hone in on those. Coming down to what I was looking at for today is one was AF. So AUDCHF, where are you? Oh, here it is. So this one wasn't too bad, right? So as always, to start out with the pattern, right? Retest, low, peak low, right? So cool. So when I'm looking at this move, the very first thing I can see here is I have my 5,200 cross, right? Once I got this 5,200 cross, as I always say, the more you guys watch this, the more you'll learn. Like you might be able to figure out this whole thing. 5,200 cross means I'm automatically in level 2, and I'm looking for M or W's off the 200, right? So automatically I can see this. Automatically, right? From there, the next thing is we have this funky M structure, head and shoulder pattern looking structure thing. It's no telling really what this even is, right? So that is my next move. I'm not trading this move because it's ugly, right? It's hideous actually. It did, however, have the M structure off the 200. It did also have the reload. You see the market baseline went above the static for that reload, and it's starting to go back down right there. So check on the reload, right? So we do have that. I'll just put reload in here really small, right? So we do have that as well. So check on the reload. So boom, once we have this M structure, right? The next thing we know that we're looking for is this bounce and retest of this same exact area right here, right? So you want to be somewhere in here, like we're interested in it right there, right? And would you look at this? If that doesn't look like the same thing, gosh darn it, I don't know what is, right? Same thing, right? And we're looking for this area here, right? Once this makes the M, runs, breaks this area, pulls back to this exact area right here. These two are the same exact thing, right? Same thing. So I can tell where I am in this cycle with this exact market structure, right? And on top of that, I can see that I have my market baseline has gone below the static. Now, this is not, the M is the first move. This next move for me is called my money trade. That's what I call this. So after the M and it comes back and breaks that zone and retests that area, on my TDI, I need to see the market baseline go below the static in this example because we're shorting, right? So once the market baseline is below the static 50, I know I'm in short zone. I'm short, right? Well, we knew we were short from way back here once the 5,200 crossed to the downside, but once the move has been completed on this M, which is the reload, the next move that happens is this bounce. So once all of this happens, let's kind of zoom in here. The next thing I'm looking for is this move to happen here, which as you can see, this move was huge. This is a huge candle, which didn't give you any time to get in, not at all, right? So if we were to draw this vertical line here, let's make this red to keep it congruent so we know we shorted and not went long, right? So one would be where am I in the cycle, right? 2, pattern, right? 3, higher time frame confirmation, right? 4, entry signal, right? So with this information, we can see that we know we are in a cycle. We see some type of pattern here, right? Man, excuse me. So we got some type of pattern here. off this 50 EMA, right? So check on box 2. The next thing we're looking for is higher time frame confirmation. Do we have that? Don't know. Let's see. Let's check it out. Let's look at the 4-hour chart. In this particular example, before, we actually did not when this candle closed, weirdly enough. Sometimes it's kind of funky how this goes, but on the hard right edge at 9 o'clock, this was not actually below it. Like it was actually above this. So kind of funky on this one. This is kind of a bad example to show the 4-hour confirmation. But sometimes if the hour and the 4-hour did not line up, it'll look like it confirmed and it kind of didn't. But on the hard right edge, when I was looking at this was not actually below it. This kind of closed afterwards. So this actually X's this out because there was no 4-hour confirmation. So I would not be interested in this at all. And lo and behold, look what it did. It didn't do anything. You would have took this trade, you would literally be at break even right now after 4 hours, right? And this is also why when I mentioned that I have a hard 2-hour rule. Like if I'm not up big in 2 hours, I just close the trade. No matter if I'm up or if I'm down, I just close it. Well, if I'm slightly up or slightly down, that's when I close it. If I'm big in profit, right? Like let's say I shorted this and price was all the way down here, I'll just move my stop loss to break even, right? So I'll still be in the trade, but I won't actually close it if I'm up far enough. So, but in this example, you would have closed this because it's hovering around the same freaking spot. So not too much on this one. Even if we did drill this down to, I'll take this off to the 15-minute, which sometimes I like to do. This is actually not pretty on the 15-minute either, for the simple fact that, yes, I have my 5,200 cross, right? And yes, I do have a funny M pattern like this, right? But what I don't like is, I don't like when the RSI is outside the band and then outside the band again. For me, when I take my setups, it's outside the band, band, inside the band, right? Because when this creates this outside structure here, when the price is out of the band here, the next move should be inside the band, right? Like you don't want it to be outside, because they could actually make a whole nother leg. So I want to see outside the band, inside the band. We call it OBIB, outside band, inside band. But to see outside the band like this and then outside the band again like this, they literally could have came over here once again and gave you another leg, and then you might have got stopped out. Like this could have went something like this instead of just dropping. So I want to see outside, inside, not outside. It just doesn't go well together. Now we did have everything else, which is the reload. So the market baseline did go above the static here, which is good, but everything else was just not good, just not looking good. So this for me was pretty much a pass on the day, right? So even though it got super close, it really wasn't it, right? Then we got two more on EC was one of them. Euro CAD, which this one was lame because this one actually did go, but I couldn't take it. All right, so let's draw this same structure again, right? You got this W, break, retest, M top, right? When you have this structure, you can see here. Now this is kind of ugly, but it is here. You got this W structure. You got the run up, misses the 200. Remember, I always say I wanted to miss the 200. The first pull back to the 50 EMA and then run up. That's the move I want to see, which is this exact move right here. Right? Same exact move is right there. Right? The only thing that was wrong with this is, and as you see, it went, which is super lame. On here, we also have the market baseline going above the static, right? And then we want to see that first pullback. This is how we want to see the first pullback to the 50 EMA and then go long on the chart. You want to see that same thing happen on the TDI, right? So market baseline crosses the static here, and then the RSI line pulls back and then runs up. So you want to see the same motion, the same action happen on both of these. The only thing with this one that went wrong was, if you look at the 15-minute chart, and let me delete this. What cannot happen is when I'm taking these setups is I can't have it hit stops high first. So like for me, this is the Asian box right here, like where they're collecting, obviously. I want this to come down. I want it to just make a move like this, right? Just come down, make the move here, and then go long. I don't want it to come out the box, hit the stops high first, and then come down, and then go back up. That's too much motion. Because now it's traders trapped on both sides, right? I don't want to be trapped over here and they got traders trapped here. They can technically range in this exact level as long as they want to. So I don't want to see them trapped on the opposite side first. I want them to just come out, trap on my side first, right? And then go long. Due to this here, that's a no-no. No. When they come out and hit the stops, they have to hit the stops on the appropriate side. In this particular example, this is the wrong side first. So this was a pass, even though it eventually did go, which is kind of lame. But hey, that's what happens, right? It definitely happens sometimes. Everything else was decent. Now we didn't have a beautiful W structure here, right? This wasn't that pretty, but the pattern was there, right? Like you could have entered here, your stops would have been below here, and your target would have been this 800 EMA right here. This for me would have been a riskier trade, and I don't really take risky trades like this. I don't even have an account for that. I just like to take my setup at higher leverage. But yeah, even if you would have took this, it would have been a nice one for 1.35, right? So risking $1 to make $1.35. Not too bad at all. Not too bad at all. And this also did give us the slight reload. Not much, but it did give us enough on the reload. So decent setup here. All right. So I didn't take AF. I didn't take EC, but I did take EJ, right? Let me get this off of here. Cool. So coming to the last one is EJ, right? EJ was kind of messed up because they took me out after they came back and ended up taking me out at break even. Now I did take a quarter off of this. I didn't put my full position on today because for me, today's a little bit chancy. It's the last Friday of the month. My data tells me I don't do awesome with the last days of the month, to be honest, especially on a Friday. So I just like to go slightly lower leverage on days like this, which is exactly what I did, right? So just coming out of the box once again, you can see we got this nice W structure here, right? Not the best, but it's nice enough. Got this nice W structure. The move was supposed to be here. Come first time it touched the 50 and run up, right? Target was supposed to be up there. As you see, that never happened, all right? They gave us this nice, and I got these two lines on here, right? This was my stop loss, and this was the TP on it. And then I had this move was my move stop loss to break even on my alerts. Where is that? Yep. So EJ. Oh, so those are active. So as you see, this happened earlier today at 11 something, right? So EJ, SL to BE, this was triggered. And then it came on down, right? And so that's why you see the next one, which is the hey is going against you, and then these two are active. But this was supposedly supposed to be the move running up, as you see. Same pattern as always. And the entry was here. I'll make this one green, keep everything congruent. All right. So cool. This was my entry candle, because as you see, once we got this cross here, right, we're looking for that first pullback to the 50 EMA, which is right here, right? And then we're looking for the very first candle to actually close above the 13 EMA, which none of these candles did. This last one was super close, but as you see, it never did it. It kind of went up, came back down. They played me for a little bit. I had to wait a whole extra hour on this, right? And then also, if you look at the 4-hour chart, the last candle, as you can see here, which is a little bit funky too. This last candle, which is, this one is actually above the 13 already. So this one was already set on the 4-hour confirmation. So we're good to go on a higher time frame. But this did not go pretty well at all, right? If you was to grab this here and then throw your strings on it, right? Take TP to this high point here, at least to here. Nice little one for 1.27, 1.3, right? But they played me. They didn't go. But this is exactly why I always say at a decent point, you want to just move your stop loss to break even. So took a quarter off of this. Remember, I only had on a half anyway. So took a nice quarter off. And when it came back literally and smashed me smashed my break even, that was it for me for today.
Yeah.
And yeah, that was pretty much it. So I didn't even especially on days like this, on Fridays, right? Last Friday of the month. And yeah, I just like to put these levels on here anyway. So like what I'll do is I'll put something like one right here, and then I'll put one like closer to around like here. Right. I just like to put these on here. So like when I step away, I don't mind stepping away on currency pairs. I just can't step away on like the indices because they move too fast.
Yeah.
So if I step away playing with my daughter or whatever the case may be, I can always kind of tell where I am. So if I grab it here and it goes up, I know, okay, I need to go ahead and move my stop loss to break even, take off partials. If it doesn't do that and it comes down here, I'm like, oh, it's going against me. I need to, probably come back to the chart, take a look at it. Obviously, if this just runs through both of those and then one candle just stops me out, I'll get notification on that. Or if it just boom jumps up, runs right past my stop loss to break even point and just hits TP, I'll know that too. So when I'm in trades on currency pairs, I like to have these 4 markers on the chart just to kind of me keeping my a pulse on the market when I'm not actively in front of it. So this was my baby trade for today. It didn't do anything really. It kind of just barely moved and then went ahead and took me out after I took off a quarter. But that was it for me for today. Not too much action. Like I said, I like to take it easy on these last few days because there's been times where I'm up on the month, where I'm like barely up, and then I like get a little bit ballsy, right? Next thing you know, I'm like, why did I do that? Why did I do that? Yep. And on top of that, it's gonna, especially on Fridays, as I mentioned to you on my trade copier, I don't want to risk me messing up my ball out weekend. So I like to keep it. I like to keep it regular. I don't do anything. I'm taking baby steps. If I was a basketball player, I'm taking layups the entire game, right? I'm no mid-range jumpers, no threes, no dunks, no nothing. I'm taking layups the entire game, because my field goal percentage is already good for the month. Quotas have been hit, so I just like to take it with ease, more or less. So
don't get greedy. You know, any emotion is never good in the markets. Even
No.
you know, greed, fear,
Nope.
you name it.
And again, this has been too many times where I've been up and like, you know, like it just never goes well. For some strange reason, it's like that. Like I kind of adapt that same ideology with the last hour of the day, right? So how I mentioned to you that I take off my position at 3. If I'm up, no matter what, I can be up 5, 6, 7x, right? If I take off, I will close my position at 355 no matter what, right? Because a lot of the times I found out that 4 to 5 area, things get a little sporadic and it's like a little too much sometimes in my position. Sometimes it just, I could be up big and in that 30-minute period, it's like right back where I started, right? So I avoid that last hour altogether. That's why I take my position off at 355 because I've been asked, why don't you take, it's like the market doesn't close till 5. Why don't you take your position off at 455? And that's why, because that last hour can be a little sporadic for me. So with that same mindset, right, the last day or Friday of the month can do that same thing. So I just avoid that for the most part altogether. Unless, again, I have like a decent setup how I had today, you know, as I mentioned. And again, even then, I still didn't put my full position on it. So just learning lessons, you know.
It makes sense. I mean, you know, after journaling and stuff, you get a pattern, you know, and you know what works and what times work, and you stick to it. It's part of your trading rules.
Exactly. That's exactly right. And again, like for me, like last Fridays of the month and just last days of the month, they were always my weakest days. You know, after a while, you're like, all right, you know, then you go through a phase where, you know, there were some setups on that last Friday of the month, or there was some decent amounts. So you're like, all right, man, I missed those. So you kind of find that middle ground. Like, you know what? I'm not going to put my full position on, and I'm not going to sit on my hands either if it's set up. I'm going to just go right in the middle. And for me, that middle was just putting half my position on.
That makes sense. We'll quickly go through some of the comments before
sweet.
This live stream ends. Robert said, "Oh, Sam, I almost got faked out and would have gotten out way early because I thought people that sold took profit according to the volume footprint. But then I realized it was the bulls buying up, thinking it was going to bounce. I thought of Sam's story time." Well done, Robert. Absolutely. I'm glad you're seeing the story and you're making sense of where what is the most logical conclusion. If you're seeing a lot of buyers enter around like a previous low, you kind of know that's you can kind of figure out it's like a mixture of both, and you're creating a story in your head of the market. So that's really good. And one for you, Michael. Michael, I believe you will play. I mean, you could probably read it yourself.
Play 128.70 again to call buyers. I guess you're referring to GU maybe on GU.
Probably, yeah.
Oh, yeah, that's on GU. Yeah. Let's see where 127 is really quick. Just take a look at it. 127. 128.70. So 28.70. Oh yeah, see 28.70 for me. Yeah. So funny enough, I'll just show this really quick, right? Really quick. 28.70 is actually a level, and funny enough, 28.70 is right here, right? This yesterday's low is 28.70. Look at the 28.70 on a dot, actually.
Yeah.
Right. So I could see that. I could totally see, maybe something. I see this cross some nice M structure here and running on down to this level. That wouldn't be bad at all, actually. So yeah, I can see that too.
Yeah, I'm looking at it now. I mean, it can happen. Absolutely. It can absolutely happen.
Mm-hmm.
We're in a longer term range, and in the last, today we were on a shorter term range. It kind of we're kind of squeezing up and down. There's a lot of indecision in the market, though. So yeah, have your wits about you. Don't imagine you're seeing things. And wait for actual confirmation.
Yes.
All right, this is actually happening. Yeah.
Yes,
But,
you need
that's
the extra
it.
compliment for sure.
Yeah, definitely.
Well,
All right. Well, Michael, it's always a pleasure.
Absolutely.
And to all the viewers,
Same.
it's been a crazy day.
Yes.
And to all the viewers,
yes.
Robert, Andre, and all the regulars, thank you guys for watching. But we are out for not for the whole
that'll
month,
do
actually. We've got Monday still. But
Yep.
then otherwise, yeah. All right,
Robert,
guys.
you let me know next week how you like that the billion show. We'll catch up next week.
Awesome.
All right, guys.
Okay, guys.
Take care.
Bye-bye.